Strategic investor partnership. The proposed buyer, which is the Vodacom Group, is a long-standing investor in Safaricom, holding approximately 40% through Vodafone Kenya, with deep regional experience and a proven track record in capital investment, digital infrastructure, innovation, and financial inclusion. Their increased stake will reinforce Safaricom's competitiveness and growth trajectory, and we have no doubt about that. On preservation of national interests, the government will still continue to retain a strategic stake representing 20% with 2 seats on the board of Safaricom to safeguard national interests, ensure continuity in governance, and preserve Kenya's digital heritage and innovation leadership. The residual 20% shareholding represents a long-term investment in Safaricom by the government. Through the transaction, Vodacom has made various commitments, including no acquisition-related redundancies within 3 years of the transaction. And we think these 3 years is sufficient to cushion our staff. Again, you can't have it for perpetuity. And again, there are business dynamics that may necessitate some actions to be taken. But at least securing 3 years for the staff in terms of no redundancies during that period, we think is good enough. And there are 9 points that we have secured in this particular transaction through signing the contract. Ensuring also that the chairman and the independent directors remain Kenyan citizens, as well as Vodacom's continued support of the Safaricom Foundation. Safaricom Foundation has become very integral in terms of supporting certain initiatives in the country and development. So we didn't want to lose also that advantage, and we have confined the foundation's activities to within our borders. Now, let me talk about approval by the National Assembly. So following the cabinet approval, a proposal was submitted to the National Assembly for parliamentary approval, or National Assembly to approve. It is worth noting that the National Assembly oversight, reinforced by the National Treasury's financial assessment, promotes transparency and accountability in the management of public investments. Then the next step will be the regulatory approval. So in addition to the approval by the National Assembly, inter alia, the transaction is also governed by the Capital Markets Act and the Capital Markets Public Offers Listings and Disclosures Regulations of 2023. It's also subject to approvals and notifications from relevant regulators and stakeholders, including the Competition Authority of Kenya, Central Bank of Kenya, Communications Authority of Kenya, and the National Nairobi Securities Exchange, where applicable. So Safaricom was listed in the Nairobi Security. Now this takes me to the background information, Chair, sorry. I'm done with the objective. I'm now going to the background information. In terms of background information, I wish to state that Safaricom was listed in the Nairobi Securities Exchange in 2008 when the initial public offer was issued. The company expanded into Ethiopia in 2022 following its licensing in 2021. The Safaricom Ethiopia business continues to struggle and is yet to break even, hence continues to require support from the shareholders. Vodacom, which is controlled by the UK-based corporation, Vodafone, has been the strategic investor in Safaricom since 1998. So for starters, it is the Vodafone Kenya which has invested in Safaricom. But Vodafone Kenya has invested on behalf of Vodacom, which is incorporated in South Africa. And Vodacom is actually a subsidiary of Vodafone, which is the parent company incorporated in the UK. So I hope that comes out clearly so that we can understand the ownership of this company. So Vodacom continues to provide technical and management expertise to the company, and it has been a significant driver of the company's success. Safaricom operates in a very tightly regulated operating environment. I think questions have been asked because we have been engaging and listening to Kenyans about whether we are losing control of this company, the security in terms of how Kenyans are secured, because this is a strategic investment. I want to state that actually, even if you look at the way we have been regulating Safaricom, it is not based on share ownership at all. It is done through regulatory framework. Even with the 35%, we were not using our board membership to control Safaricom. I want to give you examples. Even during COVID, when Safaricom had to lower the rates in terms of the duties charged, it was the CBK that made that call. It was never the National Treasury, which is the shareholder. So our shareholding has not been controlling Safaricom in terms of regulatory framework and how well it can secure the interests of Kenyans. It has been done through the regulatory framework. And those regulatory frameworks still obtains because Safaricom is incorporated in Kenya, it remains a Kenyan company, and even the management is still going to be Kenyan. So Kenya's telecommunication landscape has very mature regulators. We have CA, which is the Communication Authority, CBK, Data Commission, and the Competition Authority of Kenya. This is one business area where commercial and regulatory functions are very distinct, hence shareholding is no longer a material government tool of control. I want to also state in comparison to what I've just mentioned, shares, that look at even Airtel. We have zero ownership. It is controlled and owned exclusively by an investor, which is even an international investor. But yet, we still have regulatory control and authority over Airtel. So this questions around the security when we release the 15% has no basis at all. I think it is, to me, a pedestrian argument, so to speak. So what is the shareholding of Safaricom as it is today? The shareholding of Safaricom as it is today is 40% of Vodafone Kenya Limited, which I mentioned is acting on behalf of Vodacom, which is established or incorporated in South Africa, and ultimately to Vodafone Worldwide, which is incorporated in the UK, which is the parent company or the mother company. The Cabinet Secretary to the National Treasury of the Government of Kenya owns 35% today. And others, including those of us in the room who have invested in Safaricom individually, we own 25%. Total, 100%. But that, in terms of number of shares, is 40 billion, 65,428 shares. So what was the basis of the divesture route that we have taken, existing strategic investor? I want to mention, because this has again also come up, people are asking why have we chosen Vodacom and not any other, and why haven't we floated the shares to the Kenyans? In terms of why we have chosen the Vodacom, I will tell you these are the reasons. First is selling to existing strategic shareholder has advantages because they understand the business, they are able to take more risks, and they are able to take a more long-term strategic view as opposed to some other equity firm which may just be motivated by short-term profits. For Vodacom, they're coming in with a clear background of what this business entails and can take additional risks and can take a long-term view of the company, which we all agree that we need. Two, sufficient liquidity to complete the transaction. The amount involved is not small amount, Mr. Chairman, and so completion risk is there. There are so many other cases where we have involved in transactions and you end up, some entity ends up winning the tender, and to complete the transaction becomes complicated because they don't have the financial muscle to carry through or complete the transaction. Another reason is that Vodacom is proved to be a credible strategic investor in Kenya. I think I mentioned that. It will also allow continuity in success of the business. It was very easy for us to negotiate and agree on the continuity of business with this strategic investor because this is an investor who understands this business very well and the market very well. We were even able to negotiate that there would be no redundancies in 3 years. We were able even to negotiate for suppliers, the Kenyan suppliers and vendors, for at least 3 years without interruption on the suppliers. That would not be easy with a new entrant into the market. Again, I mentioned minimal disruption. Now, if we go to the private equity firms coming in, one, they will be more risk averse. Two, they can lead to strategic misalignment, hence erode the success of the business. 3 will not have a justification to pay a premium because they don't understand the market. And actually, this is a listed company in the market, and the share price is public. It is very hard for someone who has not been in this space to negotiate and agree with you on a target price that is way above the market price as it obtains. The other issue is likely to focus on short-term gains, hence distorting the character of the company. And finally, completion risks due to huge ticket sale, and I've mentioned that. And I want to also just to mention that we are only selling 15%. To get a major investor coming in to invest in 15% of the company and gives you a premium is not very easy. It is easier to negotiate with a company or a partner who is already in that investment, who already owns 40% and wants to increase the share ownership to 55 to give you a higher premium than bringing in someone from outside. I know questions have been asked, why didn't we go competitive? There is a risk to that. The moment you go that route and you get a lower price, it would be difficult again now to go to Vodacom and negotiate a higher price because you've gone to the market and you have failed. So we decided to look at the risk elements of going into the market and getting a lower price as opposed to discussing with a proven partner, shareholder, with the long-term standing and understanding of the business and get a premium onto the market price. Why did we sell it to other shareholders, the minority shareholders who own 25%, including you and I and other Kenyans, maybe to release more shares to the market? The reasons are as follows. So priced with reference to existing share price, typically at a discount. If we went to the market and asked Kenyans to come and bid, they would obviously follow what the market is dictating. And we are going to sell it at a discount anyway, because once you release more shares into the market, you are simply distorting the price of that share. And the law of supply and demand operates. That is economics 101. And if you are doing finance and corporate finance, you know how market pricing is done. The second one is that ticket size will require underwriting. But I want to also add, we are already taking another major asset into the market, which is the KPC. If we took this one also to the market, that would lead to market saturation, and it would hurt our pricing in the market. So again, if you sold it, especially local investors, we would not attract sufficient hard currency, and we would have lost out in the advantages of forex inflow into the country. Valuation. So the National Treasury retained the services of the Kenya Commercial Bank Investment Bank to advise on the proposed transaction. The bank provided a valuation report detailing various valuation methods. And we all know that we have various valuation methods when we are divesting and we are selling. First, it should be understood that we are not selling Safaricom. So there are certain valuation methods that would not apply in divesture. I hope those of us with a finance background understand that very well. So we are not selling an asset as such. We are divesting the shares in the market. So the following valuation approaches were used to determine the enterprise value of the business. There was the market valuation approach, and then the income valuation approach. So under the methods in use are based on several factors that influence or explain share pricing. These factors include the value of the net assets, earnings, dividends, and discounted cash flows. Shares of public companies quoted on a stock exchange are usually easier to dispose to potential buyers since their prices are more readily determinable. However, even for a quoted company, different investors and potential investors value it differently based on their valuation of the company's value determinants, such as assets, earnings. Assets, you could use assets to value, or you could use earnings, you could use dividends or future dividend flows, and you could also use the cash flows to determine the value of an asset. Now, if we use the comparatives with similar businesses, you can see we have listed a number of such known assets like ours in Africa and in the Middle East. And if you see the index that is the highest is 8.3. And our determination of this sale was also giving us 8.3, which is actually the highest. So when you use market valuation approaches, you use enterprise value and use EBITDA multiples, then you'd find that the lowest price would be 22.3. The highest price would be at 33.5. And then the average would be at 26. Now, if you look at this, the lower price and the higher price, or the highest and the lowest, are the outliers. So the average price is what would generally obtain. That is at 26.19. If you use the PE multiples, then again it comes even lower, and I think that is up there. But we used the income approaches in this. So the first one was the discounted cash flow approach, which obtained a value of 18.51 per ordinary share. The second one was discounted dividend model approach, which obtained a value of 23 per ordinary share. 23 points, it's not very visible, I think, 61. Then the next approach, which is the one that we used, was the volume weighted average price over the 6 months, ending on 2nd of December 2025. That is from the 2nd of June 2025 to 2nd of December 2025. The price was approximating at 27.5 per share. Now, we did the valuation targets. Valuation target is basically taking a 12-month long-term view or futuristic view or valuation of what the price is likely to be. Now, you can see various investment companies, reputable ones, did their target price estimation. Barclays did it in November 2025 and arrived at 31. Investec, 30 from July 2025. APSA, 30.1 from October. Basically, what that means is this is the projected price in 12 months, or target price, from the date of evaluation. FAIDA also had theirs. NCBA did their HSBC, which is very reputable, did theirs in November 2024, and they are the 28th as the target price. And by the way, by November 2025, which is exactly 12 months, the price of the shares of Safaricom was around 28. So HSBC was very accurate on their target pricing. And of course, the IBC XYS of Africa had the highest, which is at 34. Now, so the final negotiation outcome with the strategic investor yielded Kenya shillings 34 per share. The volume weighted average price over the 6 months ending up to December 2nd, as I stated, was 27.5. And this is resulting in a market capitalization, if we use 27.5 and apply it to the number of shares, which was over 40 billion, we have capitalization of approximately 1.158 trillion, or if you like in US dollars is 8.979 billion. So the actual proceeds which are likely to be raised from this transaction is 204,333,682,800 shillings, or US dollars 1.5 billion, 1.576 billion, which represent a premium to the prevailing listed share price. Actually, it is 19%. I corrected this.
Point of order, Chair. And it's quite, I'm not happy to do that because it was flowing so well. Just go back to the table because I was seeing some other figure down there. Yes, the Standard Bank investment 36. You spoke to it?
Yes.
Thank you.
Yes, proceed, Wasile.
Standard Bank, yeah.
Yeah.
Because you said 34 is the highest. Then I'm seeing 36. So I got attracted.
36. Okay.
Could you speak to that?
Yeah.
So maybe perhaps Waziri, what Mheshimiwa wants you to discuss or to explain a bit more is all the prices are below the negotiated price of 34, apart from the valuation by Standard Investment Bank, which valued it at 6.26%.
Yeah, but
Why
I
did you pick on there?
Yeah, that's good. But actually, even the valuation, the price target could be higher, even for others. But there's something I need to explain about the target price. It is a target price over 12 months. If you discount it to the present value, you'll find even 36 coming down to around 32 per share. So this is actually a projection. It's a futuristic price that we are. It can sometimes obtain, it may not obtain, depending on the market dynamics. But it is important to note them because they guide our negotiation on the consensus target price. So I think that's a good observation, Honorable Mbokombulemba. Now, I wanted us to correct the 17% to 19%. If you check with the current price of 28.5, it is 19%. Now, dividends paid in advance. GOK is receiving 40 billion today and repaying 55 billion in 6 years, implying a funding cost of about 5.6, but this can be debatable. I want to come to a more clearer picture of what this 40 billion means. It's below that 11.3% sovereign yield for the same tenor. Now, if we were to get the present value, because if we are going to get 40 billion shillings today and repay 55, but what we are going to pay is 55 billion in 6 years. Each year we are paying about 9 billion shillings. And this will be paid through our dividend. We will be foregoing our dividend to the tune of 9 billion per year on the remaining 20% shareholding. Now, the 55 billion, if you discount that using the sovereign yield rate, which is the standard available rate that we have, if we were to go to the domestic market and borrow this 40 billion today and pay, if we were paying 55 billion, if you discount it with the rates, the sovereign yield rates, the 55 billion comes to 29.3 billion today. So it means we are getting much more than the present value of the money that we are paying if you use the sovereign yield. The other way to look at it is how much is 40 billion today invested at the market rate into 6 years. If we were to have 40 billion today and you invest it in terms of you invest that 40 billion for 6 years, how much will it be at the year 6? It will be 75 billion. If that money was, if I was an individual, if this 40 billion was my money, and I take it and I buy sovereign bond at 11.3%, how much will I accumulate at year 6? It is 75 billion. Now, the other way to look at it is if you borrowed that money and you are paying 11.3%, yeah, if the government borrowed 40 billion today and you pay 11.3% on the money borrowed, how much will you pay at the end of year 6? You will end up paying 75 billion. But how much are we paying? 55 billion. So, again, I'm emphasizing on this because it's also something that has come out. The beauty with this transaction is that when we made the announcement, I'm happy that Kenyans came forward to debate. And that was the intention, to start public participation from day one. And so we have been listening and hearing the arguments from Kenyans. And I think it has actually enriched even our argument and even reinforced why some of the decisions that we have taken we took. Allow me, Chairman, just to pause for a minute, because this has been asked, that are we foregoing future dividend for immediate use of resources? The answer is yes. Who would not want to use resources immediately? By the way, chairs, even the money that we borrow, today we go to the market to borrow money from Eurobond. What are we saying? We are foregoing future taxes. We are exchanging future taxes with present money. We are going to Eurobond, borrowing money, and we are using our taxes, including this dividend that we are talking about. We will use the dividend to pay money on Eurobond, for example. Why can't we use that money to pay dividend that we are given by Vodacom in advance. So it makes sense, financial sense. If I was to be a prudent Minister for Finance, I wish I could even go for more and invest it in infrastructure today. In fact, the CBK governor asked me, why didn't you go for more? Yeah? Because if this money is borrowed cheaply, let's use that terminology loosely, that we are borrowing money from Vodacom in anticipation of dividend, and we are getting it at a lower rate, why not? That is a prudent way of managing your finances. So I have...
now that you went a bit off on that, you could use this chance to explain about securitization.
Pardon?
Now that you started that discussion, you could
Yes.
use this opportunity to just give a little bit more information to Kenyans about securitization. Now that you're talking about the example.
Securitization. I didn't want to digress here, but securitization is also in that model. There is no even difference. What we are saying is that there is a future stream of revenue that we are likely to get over a period of time. And we can go to financials and we are creating a vehicle, which is a special purpose vehicle, and selling a right into that vehicle. The right here we are selling is the right of future revenue receipts. So we are selling it to a vehicle which is taking the risk of not even receiving that money in the event things change. And then they give us the money. They will price that risk, of course. They give us the money in advance and invest in public infrastructure and forgo for a period the revenue. So it is almost the same model. The reason why I was explaining this is because if we can calculate and we find that the rate at which the cost of this facility is much lower than if we went to the market, then it makes more sense to go for this facility as opposed to going to the market to borrow. The cost is...
Is that an indirect or off the books borrowing?
You see, Chairman, it's not off the book, it's off budget. You know, when you talk of off the book on Guarico, you are talking like something is being hidden. It is in our books, but it is not in the budget. So it doesn't constrain our fiscal space, because constraining fiscal space is a problem. Honorable Guarico would want projects to be carried out in your constituency. Is it Turkana South? Turkana South. So you would want projects to be done in Turkana South, and you need us to have the fiscal space to do that. If we can create that fiscal space, the better for us. We need more money for capitation, and we cannot get that money if our fiscal space is constrained. But let me move forward a bit. I know questions will come.
Yeah, just a small question. Just a small question on this. Yeah, no. Just small clarification. We understand that the money borrowed through securitization is not entered into the public debt register. The 40 billion which we are getting, this is actually a borrowing through advance dividends. Are we going to see it reflected in the public debt register?
It will not. You know, I know there is an argument here, and sometimes with my peers here, we are at variance on this, but again, we come together. You know, I think the way economists look at borrowing is different from the way as accountants look at it. And you see, this is a future cash flow. We are selling a right. We are selling an asset. So I'm not borrowing. I've just sold an asset. Economists look at it like it's borrowing, and we have a discussion even with IMF, which I think is overpopulated by economists. Yeah, so they have the view that this
please, can you protect the economists from?
No, I'm not saying economists are wrong.
Yes, because I'm an economist.
We are here. Let me be understood, Chair.
You see, unfortunately,
I am not saying economists are wrong on this.
We have the CS who is an FCPA and the chair who is an FCPA. So
there is likely.
I'm on the accountants.
We have the PS who is also an economist.
Just provide that clarification, then we make progress. Yes.
Yeah, but anyway,
maybe chair, so that you can just finish. picking on that securitization, it sounds so sweet and nice. The issue here, Chair, is that the demands on this infrastructure and development for Kenyans are increasingly growing. The other parts of Kenya are saying we've been left for quite some time behind. So the inventory requirement for investment on this securitization cannot be discounted or finished at a go. So what if we finish the revenue streams commitment right now? What will happen tomorrow? What will happen the day after tomorrow? Because we will be tying those revenue streams for, say, 20 years, 15 years. What will happen to the new demands in future? Probably put it clear, because that is the risk that is being viewed.
Yeah. Chair, can I proceed? Yeah, that's a genuine concern. And by the way, let me also put it this way, that if you look at the way we have been using these resources, they have not even been helping any area at all, whether marginalized or not marginalized. These resources have largely been wasted. Chair, you will agree with me that we have had these sports funds for donkey years in this country. And what is it to show for it? The last international stadium of international standard that we did in this country was during Moi era, 1987. Yet we have had sports funds over these years. Until now, President Ruto came into power and decided to use this fund differently. We can see we have Talanta Stadium, which everyone believes and agrees. I don't know whether there is any Kenyan who has knowledge of what that stadium is all about. Unless you have never visited it, you would have a doubt in your mind that that's a masterclass international stadium. That would have not been possible if we continued using sports fund the way we have been using it. Sports fund was being used to do some shades, like you'd think they are border shades in some stadium somewhere, which are used when children are on holidays, and it doesn't even help much. So now we are using it differently. Look at what this road maintenance levy fund, Chair, the 7 shillings, has done to our road sector. Chair, I'm sure you are aware that late last year, the construction industry was contracting as 2.9%. Today, the construction sector is growing at 6.7%. Courtesy of the intervention that we had by bringing back contractors to sites, by using the 7 shillings differently, right? So largely, then to answer Honorable Ruto on the question of those areas which have been marginalized, for us to address marginalization in this country, it must be a holistic approach. We cannot use a specific fund. And that is why we are creating the National Infrastructure Fund, to take off some major investments and free our budget to target now the marginalized areas and come up with interventions that would help all the regions of this country to be addressed, and including some of the social services like health, which have been underfunded, education is being underfunded, things like social service, safety nets, we now need to free money. And the approach to do this is what exactly I'm presenting before the committee. If you approve the divesture of Safaricom, and later you approve for me the privatization of KPC, and I'm looking at another asset to bring, to you to approve. By the way, you know this obsession with Kenyans. I will bring as many as
is growing appetite.
I'll bring, Chairman, I'll bring as many as we feel that asset is mature. You know, Chair, let me dissuade Kenyans, and I said this and it appeared like a joke, of trying to cling to commercial enterprises. The government of Kenya owns about 30% of every business, including your kiosk. We have no business doing business. The government should provide environment for private sector to thrive and do business. Give us money, we do for you roads. Instead of taking 12 hours between Nakuru and Kisumu and Malava and Eldoret, you take 3 hours, reach your destination, make money, pay us tax. That's what we want. We don't want this thing called dividend, which we are waiting up to the end of the year. Then you give us 3 billion, and then you are saying, this is a gem. It is giving us, so do we what? You know, we are not thinking the other way around. If we took this money, look at this 200 billion. If we utilize it prudently, and we will, and develop Jomo Kenyatta's, the cost of developing Jomo Kenyatta International Airport, I'm told, is about $2 billion, which is around 260 billion. If this money was to go to the construction of Jomo Kenyatta International Airport, how much will we be getting from JKIA, an improved and revamped JKIA, compared to what Safaricom is giving us of 9 billion per year?
Yeah,
so, Chairman, can I proceed now?
Yes, I wanted to guide you. If you go that direction, we will lose focus. So continue. But just on a light note, on the weekend we had someone called I Show Speed, who we now knew about him, or he helped us know about Talanta Stadium, whichever. I don't know whether it is him who made us know about Talanta Stadium or Talanta Stadium that made us know about I Show Speed. But that was a very good show of what Kenya is and what these funds are doing. Proceed. Waziri doesn't even seem to be aware of I Show Speed. We are also all caught by surprise. There's a gentleman, a very great influencer from the US, who was over the weekend showcasing KICC, affordable housing.
I'm told he's a king.
Yes.
Yes.
He went to Talanta Stadium.
He's a king of internet.
He went to the Mara. The gentleman has over 40 million views, 40 million 50 million followers across the globe.
Yes.
And that's when you realize, I think we need to catch up with how trends are moving and even how advertising is done.
Exactly.
And I followed his channel, and I must say Kenya did exemplary well, because compared to how he visited the other countries and how he showcased the other countries, Kenya is such a gem in Africa, and I'm so proud to be Kenyan. Proceed.
Thank you, Chairman. I wish we clapped for you. But so in terms of cost, I've just listed the various costs that we are likely to incur. Then divestiture structure. In this transaction, the government of Kenya is proposing to divest 6 billion shares, which is equivalent to 15%, and we will retain 8 billion shares, equivalent to 20%. Benefits of the proposed divestiture. The proposed partial divestiture by the government of Kenya and Safaricom is a clear reflection of the growing strength and maturity of our economy as well as our capital market. And this transaction is well positioned to support the financing of our priority infrastructure projects or requirements. Our economy is in a critical turning point, and to sustain the economic achievements that we have realized thus far, both from a macro and fiscal perspective, and I've listed the macros and fiscals, we must turn to innovative financing mechanisms to fund infrastructure and public service projects. As the financial needs of the government continue to outpace our valuable public resources, private sector participation has become a critical tool in addressing infrastructure gaps, which will enhance service delivery and promote sustainable development. So the proposal is actually aligned well with the sentiments received from Kenyans during the public participation process during the 2025-26 budget making process. We have traditionally financed our budget using debt and taxation instruments, and it is now time to leverage on our other instruments to align with both economic progression and public sentiment. When I conducted public participation chairs, the Kenyans spoke that they don't want more taxes. They don't want more debt. I should sweat our assets. And that is exactly what we are doing. Actually, another public participation on this matter was during 2022 August election. Just look at the manifesto of Kenya Kwanza. It's very clear. It talks or speaks to setting up National Infrastructure Fund stroke bank, and then it goes ahead to say that we will divest from government assets and we will sell government assets to raise the initial capital, seed capital. It is clear, black and white. In Azimio Manifesto, which I helped to craft, we also spoke to creating a national infrastructure fund, and it is there in our manifesto. And so the two manifestos are almost similar, but the Kenya Kwanza one is so clear on this proposal, and Kenyans went to the ballot and voted for it. So what else, what other public participation do you need beyond that? So the National Treasury...
Waziri, I think you shouldn't go to the political place. I'll actually ask you to withdraw that statement because it doesn't go on record, because Kenyans will be saying you've already made up your mind. Why are you stopping the public participation happening on this matter.
No, by the way, I've not stopped. Public participation, I'm sure, is actually, we've just started.
But you know, someone can interpret that you've already made up your mind that.
No, I'm just reminding Kenyans that they did some public participation. And going forward, they should do more public participation by looking at the manifesto of political parties and not just listening to people talking in funerals and making a decision on that. Yeah, so that when now the party which wins power starts implementing its manifesto, then we don't make noise. It is actually a civic education that I'm offering Kenyans while seated here, because I think I have under obligation and have a responsibility to speak to Kenyans that they owe it to themselves to read the manifestos and understand. Now, the National Treasury is also carrying out an economy-wide and state corporation sector-specific reforms and corporation-specific restructurings, not just as an end in itself, and also in response to policy and business dynamics. The dynamics include the following. Of course, the coming of age of the private sector that can deliver commercial activities more efficiently, hence part of the need for privatization of government-owned enterprises. And we came up with the Government-Owned Enterprises Act, where we are targeting about 60 state-owned enterprises which are commercially viable to be operated in a manner that makes commercial sense. The need to elevate the role of government to one of policy and regulation to support commercial activities of the private sector, to avoid conflict at the commercial operations level. So the specific benefits of this special divestiture have been listed: opportunity to raise capital, optimization of our mature investments. The capital received can be deployed towards infrastructure investment, inward flow of much needed foreign exchange or hard currency into our economy, while retaining the government's material stake, which is at 20%. So the government will retain a material investment in Safaricom, which through this transaction will become part of one of the largest and most respected telecommunication companies in the world. I want to talk about economic imperatives. To pace up with the resources required to deliver priority infrastructure, the National Treasury has identified strategic divestitures as a key to address the following three major economic balances. That is government debts, budget balances, and economic stimulation. We want to stimulate our economy. And this regard, our program is designed to address fiscal sustainability challenges by limiting government debt, constraining budget deficits, and promoting counter-cyclical fiscal policy. So having pursued fiscal consolidation over the last 3 years, as I mentioned, the policy has now reached optimal levels and hence cannot be pushed further. In this case, then we need economic stimulus that should be pursued. It is apparent that unlike taxation, and this I also want to emphasize, unlike taxation, privatization never reduces private sector wealth. It actually enhances private sector wealth. But taxes, whether you look at it in whichever way, it reduces private sector wealth. In most cases, it encourages propensity to invest and enhance aggregate demand. We are also trying to deepen our capital markets. From a capital markets development perspective, GOK intends to build its capacity and capability to crowd in private sector resources to enable it to have a wider elasticity in optimizing the limited resources. The transaction shall now increase institutional investors' desired stock of assets. And you know, we are ranking very high in Africa. In 2024, we were the leading in terms of market capitalization of NSC. Last year, we came below Egypt, I think, but still we are number 2. Let me speak to value realization. The partial divestiture, especially to an existing partner like Vodacom, enables the government to realize optimal value from its mature investment by selling at 34%, which represents a significant premium compared to the market price, as opposed to an on-market if we went to the market to sell, which would have typically attracted a discount to the market price. So I think I've spoken about that. Additionally, this proposed transaction includes a further aspect whereby Vodacom will make upfront payment of 40 billion to the government in lieu of future dividends. I think I've explained that. Continued growth and investment of Safaricom. The key benefits, I think I'm almost done, so Chair, you'll bear with me. The key benefit that GOK shall derive from the divestiture is to mitigate the risk of future dilution due to capital requirements by the business. In fact, even without reading this, Chair, because it is well documented there, I just want to explain what dilution means. You see, an area like a space like telecommunication sector is a and intensive capital investment space. Chances are that very soon you will find that there is a requirement to put in more resources to develop Safaricom or to expand it. If that call comes, if a capital call is made, the government of Kenya, even retaining 35%, will be required to inject more capital. And you know we have a constrained fiscal space. We are even struggling to pay some subscriptions in the international agreements. If that comes when we have a tight fiscal space like we have it today, and then we are not able to inject more capital, we will definitely have our capital diluted at zero returns to us. And so we need to take a proactive approach and minimize and reduce our share ownership and offload shares at some gain. This is not idle talk. It has happened in this country. KCB, a call was made and we were not able to subscribe to that rights issue. What happened? Our share ownership of KCB was diluted, and it could happen to the Safaricom as well. So we need to lower our share ownership in Safaricom to mitigate against such risks. So I wanted to end there and just request the Joint Committee to consider and recommend the approval of the proposal for partial divestiture by GOK of its shareholding from 35% to 20% in Safaricom PLC. Thank you, Mr. Chairman. I submit.
Thank you very much, Waziri, for your presentation. And now we give a chance to round of questions. We start with Dr. Ariko there, then the Honorable Rapkirwa, then Honorable Manduku, then Honorable Makilap, then Honorable Mboni in that order, and then Honorable Kibichibiego. Dr. Ariko?
Thank you, Chair. Chair, the expert has spoken. An expert that I can equate to the economist by the name Adam Smith. Adam Smith, I learned something from Adam Smith, which I've learned from CS FCV Mbadi. Adam Smith was a proponent of free trade or liberalization. He was against restrictions by the government. But it reached a time when Adam Smith was absorbed in government as the director of the Commission of Customs. He behaved differently. And that's what we call a learn from ironies of intellectual history. That's what I've learned. And also, moral sentiment change with environment. My former chairperson has changed completely. But I tell you, if he was still a chairman of my party, I think it could be contradicting. Let me go to the presentation of the CS. I want to appreciate the presentation. The presentation has really convinced me a lot. But I want to take the interest of the minority shareholders. Because this matter, I have not seen anywhere in the presentation that this matter was an agenda of the board of directors or at the AGM, was never discussed at the AGM of Safaricom, so that even the minority shareholders have a say. If you look at let me ask, if the issue by government to Vodafone can be affected by preemptive clauses, which is under Section 338 of the Companies Act, what will happen to the government or to the shareholder if the minority shareholders go to court because they have a right under Section 780 of the Companies Act, because they need to be granted the right for the oppressive conduct of major shareholders is protected under Section 780 of the Companies Act. Because when the issue by government or offload the shares to Vodafone, there was need to tag along right to the minority shareholders, which has not been done by the government. Chair, why not 10%? Why 15% to make Vodafone
the major shareholder. Why not float 10 to at least, or less than 10, to at least make Vodafone own shares less than 50%. Finally, openness and accountability. Within the premise or the environment of Safaricom, was there openness? Did we give these other shareholders information with regard to our issue to Vodafone? Did we give any information? Thank you, Chair.
Thank you, Dr. Ariko. Waziri, note down the questions, and you'll respond to all of them together. Anna Barab Kiro?
Thank you, Madam Chair. My question to the CS is simple. Was public participation taken that people said we want to offload this particular stock to the market? Safaricom is one of the prime stocks in Kenya. It has all our data, it has all security, it has interest of this nation. Now, you are saying as a government that you are giving a foreign entity 55%, which they will have a say in everything that is done in the country. They will control the elections, they'll control security, they'll control everything. And you are telling us that we are selling 15%, it will be 55 now. Have we sat down to really think twice about selling Safaricom, not to an individual who is a Kenyan, or now we are selling to a foreign entity? Can you? Thank you.
Thank you.
Thank you. Thank you, Chair. Thank you, Bwana CS, for a very good presentation. Two questions, Bwana CS. The first question is, when we grant the approval of this sale, what assurance do we have as the National Assembly that funds or proceeds from these sales will be ring-fenced exclusively for the development of infrastructure? And I'm coming from a background where we have had this before us, and I remember specifically during the enactment of the Affordable Housing Program, where the court ruled that in the absence of a specific fund to direct all the levies, then it was going to be against the law. Are you assuring this House that you shall fast track the enactment of the National Infrastructure Fund, or in the absence, assure us that these funds will be ring-fenced for exclusive use for the development of infrastructure in this country? Number two, and final question. I am one of those people who actually believe, just as you do, that government should not do business. And let me be the devil's advocate today. Now that you've convinced us with the valuation, with the strategic investor or partner, why are you selling? Why are you divesting 15%? If it's a good deal, why don't you divest 100%? We get out of it. If you are convinced that this is the right thing to do, why don't you go back to cabinet and just divest 100% and get out of Safaricom? And because I don't believe that telecom is any longer strategic, because there are many players, it's very competitive, a lot of innovation, there could be disruptive technology. You remember the case of Starlink? And so why are we holding on to Safaricom? We get out of it and do other things. Thank you.
Thank you so much, Chair. Chair, allow me to raise a few questions so brief. Number one, may I appreciate the Cabinet Secretary for very eloquent and adequate presentation on this one. We just try to touch on key issues that were being of concern. Chair, today we are here discussing on disposal or divesting of government interest in Safaricom at the value of 204 billion. That is in equivalent with the prevailing exchange rate. Recently, and not long time ago, Safaricom was moving to Ethiopia, and as well we know that the cost related to that mobility in terms of licenses on telcos and licenses on M-Pesa, it tallied $1 billion US, with comparison of Kenyan current currency, exchange rate of 130, is around 130 billion. That value as compared to what we seek to fetch of 200 billion is so close to the extent. What is the rationale in terms of coughing out 130 billion to seek a new market, and then we want to offload our interest of around 204 billion as a benefit today? The other issue, Chair, from the presentation of the Cabinet Secretary, he allays that out of the concern of consistent budget deficit that seems unsustainable going forward, the only option now is to offload what we have. Yes, I agree, it can give a shock or a slack line in terms of debt management, because we can be able to develop infrastructure with our own money and hold borrowing probably external. But of course, we will all agree for cash management, domestic debt will still have to soar. What is the certainty that after finishing with Safaricom, 2 years, 1 year to come, will not come back again seeking for additional space to borrow? Because, or how are we going to manage the desire for this deficit, fiscal deficit in our budgets? We're just sorting out immediate problem. Are we really going to bring down, or are we going to remain there? Don't we foresee that gap will grow in future? The other question is on dilution. Chair, you will agree with me. Today, all the dividends that were to be retained within the country by Kenya owning Safaricom are shifted hands. The investor is not a Kenyan. You understand about profit shifting, repatriation of money now. The gains on this will be repatriated to the country of origin to the investor. There is a risk on Forex. I don't know whether you've looked at that. A huge amount will be required to be moved out. What will happen to our foreign reserves at that point? How are you planning to manage that risk in terms of foreign reserves and also influence on Forex exchange? Lastly, you brought out the issue that this particular sessional paper is prepared on the basis of Privatization Act. You are aware that Privatization Act, the spirit behind it is the aspect of public participation, drawing of program which is subject to public participation, up to implementation which is subject to public participation. How would you just quote one line, Bwana CS, and as a basis of this, that you can directly decide from cabinet and move on to implementation, foregoing the other circle which has been provided by law? That one put issue. I've never heard you talk about government or state-owned enterprise act and government-linked act that was approved the other day. What, you only looked at privatization, which holistically, it speaks about the different thing altogether. Thank you so much, Chair.
Thank you, CPA. Honorable Makilap, then Honorable Mboni, then Honorable Biego, then on the side, Honorable Muthama, and lastly, FCP Oyula.
Thank you, Chairman. I think first and foremost, I want to thank the CS for helping us and even myself to be able to understand this process and allay the fears that we had all along. You answered it. And why are we in this situation? Why are we in this situation of disposing some shares in government-linked enterprises or corporations? It's because of borrowing and because Kenyans have said we don't take more taxes. And we need to, to reduce the fiscal space that we have in our budget of about 924 billion. I think, in my opinion, as a comment, this is the best way out, rather than going to Bretton Woods institutions that gives us a lot of conditions to pass some laws that are not palatable for Kenyans, this is the best way out. But now, number one, CS is that you actually helped us because this process of selling of shares of Safaricom is not going to follow the entire privatization process of selling or privatizing companies, but rather you enter through the PFM Act to dispose the shares. In that circumstances, can you tell this committee then, because now it is now very clear that the proceeds of this transaction will go to conserved fund, and if it goes there, then how do you secure, how can we ring-fence this money so that it will go to the purpose intended, especially on infrastructure development of our country? How do you ring-fence that the proceeds of this transaction? Secondly, Chair, is that now that senior partners, I call them senior partners or owners of Safaricom, the Vodacom and the government through the National Treasury. So two senior partners agree that, oh, my brother, I have a serious problem in my budget and I have a lot of debts. Can I sell to you this one so that I get resources to sort out my problem? The other one says, okay, let's negotiate, and they agree on 34 shillings per share. These are two people like me and Bonnie here, and these are not new fellows. They have been in this business. Yeah, so they have been in this business before. The Vodafone used to have more, and it's sold to government. Now government goes up to a stage, he comes back and says, oh, senior partner, take again. And I need some money to do one or two development projects in my country. Then you agree on a price of 34. What happens to this other shareholder, minority shareholders? Suppose now they hear that there is a deal here. These two partners are, this one is selling to the other one at 34, and yet the market is 27. I can also sell mine to this other guy. Once you are done with your deal, I will tell this senior partner, now, I also have shares, and I want that at 4 shillings, take it. So in the long run, Vodafone will wipe out everybody and become a single owner. And in that particular case, then my question is, Cabinet Secretary, what about the data protection of Kenyans? Because this entire Safaricom infrastructure holds a lot of security details, data protection for many Kenyans, people who have been doing business. What about the retailers of Safaricom? What about the dealers of Safaricom? What about the beneficiaries of Safaricom Foundation? What is going to happen with the entire process here? And now that you are coming at a time that dividends for Safaricom is supposed, the financial year of Safaricom is March. What about dividends of these other shareholders that you want to close a deal before March when they will be having dividends? What's going to happen there? Secondly, Chairman, governance, the future governance of the new Safaricom, where Vodafone is the majority. This is a serious strategic national asset. How will their governance look like? It says we shall maintain 2 slots for board for 3 years. After 3 years, and that is even weak. So what happens after 3 years that Safaricom will have having that kind of thing? Then finally, Chair, is that there is in your report, Expression 1.7, you talked about the regulatory authorities that will come after Parliament. Between these regulatory bodies and Parliament, regulatory approval by Capital Markets Authority, Central Bank of Kenya, and so many others, how can they come when Parliament will have made a decision? Who should actually come first? Is this other guys or us? It looks like when we do it, it will be subjected to the other entities. I thought Parliament is supreme and can be able to be the final naysayer. Otherwise, Chairman, from this thing, if we are able to raise 240 billion on this matter and be able to sort out infrastructure and reduce our fiscal deficit, then Many Kenyans are saying, why do you sell the fat cow and leave those which are suffering? The truth of the matter is, if you want something and you want resources, you don't sell thin and devastated animals. You sell the ones that are fat and get the money to do your job.
Thank you. Honorable Mbadi?
Yeah, that's why I was telling McGrath we cannot do business, because he's talking about selling cows. Me, I don't keep cows. I do other businesses. Chair, thank you very much, Ivan CS, for that presentation. And Chair, this is something we have been talking about for many years, looking for alternative financing mechanisms. That to me is very important, because this idea of borrowing is not sustainable. Already is not sustainable. So we have to look for alternative ways of borrowing. And I want to say that I support privatization of government agencies, because when you look at our budget, the support to these agencies is around 1 billion shillings, 1 trillion shillings per annually. And this money which goes to West, most of these parastatals, they don't perform. And we are spending 1 billion shillings, trillion shillings to support them. So the best thing is to dispose them. I really don't care if they are fat or not. What I care is is how we are disposing them. In fact, when if they are not performing, you can even give them for free, so that the burden goes right. So I really support that. But I think, Chair, we need to think about a Marshall Plan for this country. Infrastructure alone is not enough. Marshall Plan, I think PS can understand it because they come from the academic sector, which I also belong. Because we really need to address various sectors of this economy. Because even if we do infrastructure and agriculture, industry is not performing, then we are not moving to the direction we need. Having said that, I have concerned on this paper. The first concern is, why initiate the cell without first of all initiating the infrastructure establishment of infrastructure board, infrastructure fund? Suppose today this session paper goes through, and for the form, they are ready to pay, they give us the money. Where is that money going to? And why I'm saying this, last year but one, the way we had the issues of housing fund, and we went through with the housing fund. The bill came to this parliament, it became an act, but somebody went to court. And the question was, where is this money going? So, of course, the courts threw it out. So why should we, first of all, have started with the infrastructure fund first, then we come to this one? I think these are something which the CS we need to address it. CS, the sale of this 15% will really change the whole the whole ownership structure. Fondaform will have 55%, and the protection is only for 3 years. So what happens after 3 years? After 3 years, who is going to be the chairman? What is our stake in this? What is going to happen to the staff? Are we going to see the headquarters of Safaricom being moved from here to South Africa? Because if I buy, I'm the majority share, I make all the decision. It's not binding. What is going to happen to our security data? Because Safaricom, really, all our security data is there. Our financial transactions are there. What is going to happen to that after 3 years? So it's something we need really to think about before. That concern, is there a provision for buyback of the shares? Can we be able to buy back the shares? And why should we actually sell 50%? Why can't we even sell 10% so that Fondaform have less than 51%? So that we still have control of, Because I'm actually wondering, if today you get the 200 billion shillings, how are we going to be able to utilize that money within a year? Unless you are telling us this money is going to pay for pending bills or debt. Because I'm not seeing how we can be able to utilize that money. You are telling us you want to be advanced 40 billion shillings. What is the implication of that? In terms of, if you are coming to me and you are selling me something, and you want me to give you money in advance, first of all, in terms of negotiation, you are negotiating at a weaker point. Because already I know you are financially constrained. So I can give you whatever I want. If you bring me your cow, like this gentleman here, and I realize he has no school fees. I can decide to give him 20,000 and still take the cow, and then I can decide to pay him after 1 year. So why did you decide to go for advance of 40 billion? Because that one made you be in a very weak situation. This money is going to be partially used to build roads, which are supposed to be maintained. Now you're also telling us the road maintenance levy has also been taken for statutorization. So how are we going to maintain those roads? How? I mean, we need to tell us. Those are concerns which, as a Kenyan, I need to know. And do you have a list of the projects which you want to fund? Suppose now you get the 200 billion today, and you know, you also told us you also bring another one, and the pipeline is also is on the way. You are telling us you are bringing another one. So to me, you want to raise around 500 billion. Which projects are these? Because we need to know which are these projects. Yeah, Nasikoapi, which area? Yeah, so that we are not going. Chair, why this economy has not been growing? And I'll tell you as an economist, is because most of the money we borrow, they are invested in various, in particular areas, which are not, actually, the law of diminishing returns has applied. I'll say that, you know, I was part of the people who are doing LAPSET as a consultant. LAPSET project implemented was supposed to add 2 percentage points to GDP. 2 percentage points to the GDP. And that's a project which we should think about. How do we implement and open Northeastern? Because if we are going to put that money in the same places, I'll tell you we are not going to get returns. So we need to think about other places apart from the traditional investment places. Lastly, this is the elephant in the room. Who is the transaction officer, advisor? Who is this person? And how much is he getting from these transactions? Because what is the commission? Because, you know, 2 years ago, we had issues of telecom. I'm an economist. I maybe have interest. Now, telecom. Transaction officer, he worked for less than 2 months, and he got, was it 400 million? 550 million Kenya shillings. Then some of us are asking, are we in the wrong career? If you can work for 2 months, actually we are doing mathematics. This guy was making like 10 million every day. Yeah. So who is this person? How much are you paying? So that at least we can understand as Kenyans. And whatever we are paying him, the 40 billion, is it part of? Part of the transaction. Yeah, is it part of it? Because now the loss of 55 we are talking about, we also add to that, because that is a loss also. Thank you very much.
Thank you. After you, it was Honorable Biego, then Honorable Muthama, then FCP Oyula, and then you come to. Okay, fine. Let me finish on this side.
Yes, thank you for this opportunity, Chair. I'd like first to say thank you so much and congratulations to the CS because he was very eloquent and he has explained many other things which you would have otherwise been asking. But lastly, you made a request that the committee considers and recommends the approval for the partial divestiture. But CS, it looked like you have already made up your mind for the sale to Vodafone for reasons you have given us. But don't you think that is unfair to others who would have wanted to have an opportunity to also have these shares? And what exactly informed you on the 15% and not any other percentage? And in issues to do with the ownership and structure, control and corporate governance, CS, it's very clear that this would reduce the government's ownership to 20% and increase Vodacom. Most of my colleagues have said, and that would be the case, that this would create the majority of foreign shareholding. And fundamentally, it will alter Safaricom's ownership and governance structure. Now, I don't know whether you have contacted Safaricom board and have they formally approved the transaction as a reserved strategic matter, including consideration of the change in control implications. And number two, CS, is that does the government possess any preemptive contractual or veto rights regarding the identity of the purchaser of its shares? So I think those are basically my concerns. Thank you.
Thank you, Biego.
Thank you, Chair. I have listened carefully to the CS intervention, where he's talking of that the country is at a critical turning point. And for that reason, that is one of the reasons why Safaricom or the other company of the pipeline, we are looking at releasing some of the shares so that we are able to get the infrastructure development and the like. As a treasury, how far do you think this approach or this strategy can sustain this country so that we attain or we keep the pace of the development that you are projecting? Then we will end up, it is true, I agree, I'm in agreement that the government should not trade. But as much as the government should not trade, then the Treasury also must devise mechanisms that are sustainable and that are enough to revamp the economy from the grassroots, other than just going for the fat cow and selling. Go for another chicken, sell it. When you finish everything in the house, what will you do? Secondly, Chair, at 2.1 of the submission by the CS, he said that Safaricom is extending to Ethiopia. When I listened carefully to the CS, he talked like the board chairman of Safaricom, where he was giving the justification why Safaricom now needs more money to extend to Ethiopia, and other than focusing on the Kenyans who are looking at how to get the same funds that we need to revamp and sustain our development. Because if reason for us releasing these shares is so that you can invest in Safaricom, then you should have also given us the projections and the return on investment of the said venture that you are venturing into. Thank you, Chair.
Asante, Dr. Kasalu, then, sorry, FCP Mayor first.
Oh, thank you, Chair. Chair, let me begin by thanking the CS for his very clear presentation. I think he went out of his way to make sure that we understand what is going to take place. CS, I have two fears which I would want you to look at and be very clear about that. First and foremost, we are talking of infrastructure fund
and other funds to be established. And we are talking of these funds being credited to those infrastructure funds. We are not sure yet, because as of now, any monies you raise must go to the consolidated fund. So if you want this money to go to the infrastructure fund, you must move very fast to ensure the fund is established. Otherwise, we are going to have funny cases of money being credited where it should not go. The second issue, CS, is about the security of this country. We are all aware that Safaricom is handling a lot of security information about this country. And we are giving power to the Vodafone to take the highest percentage control of the company. So I'm not sure what Treasury is putting in place to ensure that our security information is properly handled and protected when this transaction takes place. Thank you.
Dr. Kasaru.
Thank you, Chair. And I've keenly listened to the CS, and your objective is right. However, we must do this right. I'm concerned about the sale of 15%. And you know, in our household, and you have this nice bowl which has very good seeds. You would ordinarily, if you want to sell, ask your sons if they are first interested to buy before you go to your neighbor, because you want to keep it within the household. Secondly, you also spoke of the Kenya Kwanza manifesto and is it Azimio? No, we have forgotten the names because a lot of things have changed. Now let's, whatever and you said maybe the election was almost like we were doing public participation. But lately, the president as well has spoken about Singapore. So even as you speak about the sale of Safaricom, probably we should look at how Singapore has dealt with this telecommunication industry. And you will find that the telecommunication company in Singapore is called Singtel, and is 100% owned by the government. So I don't know why we would want to go contrary, and we are heading towards Singapore. Lastly, is the issue of, we are talking about 3 years, and you know 3 years is a very short time. 3 years is a very short time, and a lot can happen within 3 years. We are looking at our staff, our young children who probably, and Gen Zs who are going to lose their jobs within the 3 years, because we don't know what Vodacom will decide. And in this country, it's very difficult to get jobs. Chair, these are some of the concerns I have, and sincerely, this cow should be retained within the household. Thank you, Chair.
Thank you, Dr. Kasalu. Honorable Mikasim, then Honorable Kaluma. Yes.
Thank you, Chairman. Thank you, CS, for the elaborate presentation. At least things are more clearer now. I don't want to go back to the questions asked by the members. My worry, CS, I'll pick up from where Honorable Kasalu left at, is the 3 years. Could this be strategic, knowing that the 3 years is going to end in 2028? That is the first question. My second question is, we have 7,000 employees, both at Safaricom as employees and lead dealers as well as agents, as well as, we cascade it down to the lowest level. What would be the future of these dealers? Safaricom is just a shell without the dealers, without the agents. I don't know the last time many of us carried cash. We are so accustomed to carrying, having M-Pesa, You feel very comfortable when you have even 1,000 shillings in your M-Pesa because that translates to cash. You want to send it to someone, you want to consume it, you're safe. Safaricom now added. That now is on the social responsibility part, the CSR. It has touched every household, whether infrastructural, whether it is women in business, whether it is youth funds, say it all, young people in entrepreneurship. What is the future of these people? How about Vodafone being the largest shareholder, decides one day that they're dealing away with all dealers or all these employees, then what happens? Number three, Honorable CS, you spoke about the intended purpose of the funds, which I relate to very well if the funds are going to go to the intended purposes. Energy, irrigation is where my county lacks, and hoping that that is going to go to northeastern Kenya, where we've not seen development the longest time. The only hope we are clinging to is now the road of Horn of Africa, which we hope and pray that it's going to, under your leadership, we will see the implementation of that road. The other day, as the Honorable Chair KK said on the influencer that came here, I Shall Speed, we realized that Kenya is a vibrant, youthful, aspirational African state. Courtesy of our children and our nephews, we came to know who I Shall Speed was. And because of his visit to Kenya, he gained 2 million new subscribers. That is not a small number, Honorable CS. How best then can we strategically place ourselves and tap on the youthful energy that Kenyans have, and not the normal wildlife and the beaches that we have, so that we tap more money economically? Thank you very much.
Asante, Mheshimiwa Kaluma, mbunge wa Homa Bay.
Yes, I'm MP for Homa Bay Town. Thank you, CS. CS, just clarify for me the timeline for this transaction. By when, if you were to get parliamentary approval, should the transaction conclude? And I'm tying this to the question being asked regarding compliance with the provisions of Article 206 of the Constitution. Hope you get me. I'm asking this CS vis-a-vis the need for you to comply with Article 206 of the Constitution, which says that all monies received by the national government shall go to the consolidated fund unless there is a separate fund, or except where a separate fund is established by Parliament. So this fund members are asking about, we've not enacted a law in creating infrastructure fund. Think around that and let us have that response. The second concern, CS, and I think all members have brushed over it, relates to what Safaricom is to Kenya. And I think what is coming out is that Safaricom is not just about the commercial benefit the state derives from it. Safaricom has a role in our democracy as a major platform for transmission of election results. Safaricom has a major role in our security operations and systems. I won't go into the details of that. Safaricom holds a lot of data, both financial and personal, for Kenyans. It makes me ask if we are selling these shares just to get money for this critical infrastructure, have we thought about alternatives like public-private partnership arrangements and how they could come in? You mentioned Bishop 2. I went to Bishop 2, where Ethiopia is doing a very big new airport last year. And indeed, it is a good thing. It is being done under PPP arrangement. I think I have even the contacts of the people who are doing it. Why don't we think of those other alternatives instead of selling this? And then tied to that, CS, currently Vodacom has 40% shareholding. The national government or Kenya has 35. What is the breakdown of the 25? I'm seeking to confirm whether the 25 is locally owned. Whether it is locally owned. And I'm tying this to the worry being expressed. I'm not a finance mind, I'm a legal mind. But why do we take majority shareholding to Vodacom instead of having majority shareholding locally within Kenya or among the citizens? I'm keen to see this breakdown, because in terms of my understanding of company law, the period of 3 years is not enough security for such a strategic investment for Kenya. I don't think I should even call it investment. I should call it facility. I'll need this breakdown. Number 4 is I needed to confirm with you the registration of Vodacom as a foreign company. I don't know whether you've confirmed that. And Chair, I'm asking this. Remember, we were dealing with this one, which came testing the eyes of Kenyans, was which one? And not pipeline, yes. Yes, and among the things we confirmed when we were dealing with that issue was that that company, while doing business in Kenya, was not yet registered as a foreign company. Yes, WorldCoin. So I just hope, CS, you have documentation to confirm that the Vodacom to which we are selling is duly registered as a foreign company in Kenya. But lastly, CS relates to parliamentary approval versus these regulatory authorities. I think it has been asked. I've tried checking Section 87, subsection A. No, Section 87A. I'm not getting it. But I would think that parliamentary approval, this being a representative house, should come last. Maybe there should be some clarity about that. And tied to that last one is how, of course, you identified Vodacom as the body to do business with. And my concern is that it does not appear to allow enough competition that would give us the maximum pricing, and that would secure, local interest, better. So just those clarifications, then I think I would be able to make my decision. I thank you, Chair.
Chair, just a point of...
just to be fair, Honorable Kwenya has not had a chance to ask. So let's have Honorable Kwenya, then you have a follow-up question. Then we give Waziri a chance to respond to this one, and have a second round of questions.
Thank you, Chair, for this chance. And I'm happy with the presentation by Waziri. Every time I listen to CS Mbadi, it's truly a transformation story of Paul, Saul going to Damascus, and now Paul. Because I used to sit next to him in the National Assembly, and I like the grasp of the many questions that you'd ask, you're able to really be ahead of us in terms of your presentation, which I'm very pleased, and especially on some issues that I would have asked. But I'll still mention just a few. Chair, the issue that is at hand is not whether it is right or wrong to sell a government stake. The issue that is at hand is that public trust has gone to an all-time low in terms of the relationship between the public and the government. And to restore that confidence, because citizens need confidence in their government, it is that we must not be seen to be doing any business at the tables. Why am I saying this, Chair? This is a sale of government assets, because 35% of our shareholding in Safaricom is an asset of the people of Kenya. And now we are disposing this asset. I have not heard the CS mention anything to do with Public Procurement and Disposal Act as is enshrined in our in the Act. I mean in our laws. And I would think that maybe you'd have called for bids just for purposes of public trust, so that then they do not ask, how is it that you settled on this one bidder, so to say, this one, because it's direct sale, you know, there was no competition whatsoever. Maybe that I would need to be guided as to why really that was avoided. But having said that, Chair, we also know that the envisaged proceeds are just to finance budget this financial year. I would wish to have seen a projection as to the impact in terms of GDP growth of the monies that we're going to inject in the critical infrastructure that we're talking about. I would wish to see that growth, so that then, as you present our budget, next budget, you'll be able to tell us now we have been able to expand our fiscal space, and the fiscal deficit is shrinking as a result of the investment that we're going to do with the money that we're going to get. And finally, there's a short-term kind of liquidity leverage that we are trying to get, because it only applies within this financial year. We would wish to see, as citizens and members of parliament, a budget whereby next financial year you're telling us our fiscal deficit is shrinking to this extent, based on the fact that we did not borrow the year 2025-26. And Chair, there is also this issue of infrastructure fund. It has not been established. Yet, we know that this sale has timelines. So indeed, within a few days, it will go through, or otherwise. If it happens to go through, the proceeds will just go direct to Consolidation Fund as enshrined in PFMA. But I've heard the President himself pronouncing on this matter, saying that he would wish that these monies go to infrastructure fund, so that then all these projects that are going to be funded, we can actually see the proceeds of the sales of the two corporations, one KPC and now Safaricom, how the money is going to be utilized. And it will be so easy even for us as members of parliament to follow up and say, yes, we did a good thing because of giving a nod to the sale of these two critical corporations. But if that is not done, then we'll be going through the same circles that we've been going through. You know, money is raised, even borrowed, and you know the constitution is very clear that any borrowed funds should go to capital expenditure. But if this money hits the coffers of the national treasury, I am so sure it will either go to payment of debts, payment of salaries, and no recurrent expenditure, which really we need to speak into. The establishment of this fund, you've been very quiet on it, Honorable CS, and I think it's just about time that you delve into this issue, so that for a deeper understanding, so that then we're sure of what is it that we are authorizing.
Thank you. CPA, a quick.
Thank you. Just a quick, while, CS made a huge presentation which was very detailed, and as time goes, I was expecting someone to raise this concern. One issue, Chairman, from the accounting point of view, we know that Safaricom financial year ends at 31st March, which is 2 months to come. CS, speak about the dividends, that I can call it the near future dividends. I have not heard it talked about in this discussion. Are we foregoing it? Is it part of the 204 billion we are negotiating? Is it, because we only mentioned the advance dividends of around 40 billion. CS, while in your presentation, you mentioned something that is very good and critical for you to clarify, that the National Treasury has an existing contract with Vodacom. It is only fair if you could expound this, because the questions that probably you might have said in a jargon that may not be understood by layman, the question they're asking now, sourcing, like this looks like it's a single sourcing of your buyer. Explain this contract in relation to that, or whatever the contents is all about. Thank you.
So, thank you very much, members. Maybe a quick ones from myself as well, so that you can respond to all of them. This matter, I think, was raised by CPA Ruto, the risk of tax planning. Safaricom is our largest taxpayer, and having the majority shareholder and Kenyan, then what stops them from incorporating in one of those tax havens, and then that we have double taxation agreement with, and end up paying as 5% corporation tax instead of the, how will we safeguard ourselves against that? Because Vodacom is a business person. If they can save on how much they're paying on taxes, then they certainly would. Secondly, there has been a view that even though Safaricom is a giant telecom, the largest, it's also the largest bank, technically, with 111 billion shillings of transactions every day. So wouldn't it have maybe better that we first split Safaricom from Safaricom voice and data and Safaricom M-Pesa, and then now get more value for the company, and then they sell, one or the other. And I think this discussion has been there for a while. Maybe is it now the right time to probably split the two businesses first, and then sell one side of it? The issue of the decision by the minority shareholders. Was there an AGM resolution, that was arrived at, or a board resolution approving this particular transaction? The 3 years redundancy period, I think, has been raised by everyone, and I think you will need to take time to expound on that 3 years redundancy protection. When will these funds be paid? Assuming that this transaction is approved in the 28 days as envisioned by the PFM Act, when will the actual payments of the dividends upfront and the transaction amounts be paid? Then 240 billion shillings at once is a very huge amount of money to absorb. So is there a plan already on where that money is going to? Because or are we diversifying this particular investment, and then we have the money sitting in our bank accounts, not absorbed for the next 1 or 2 years, times that we should be getting dividends. The financial year for Safaricom ends in, I think, March. So what does happen to the dividends supposed to get this year? So who gets paid? Is it government of Kenya, or is it the new shareholder? Because we're just at the tail end of financial year when we should be receiving dividends for this financial year. Then lastly, on the legal framework, the good thing was we have an advantage of having had this debate with you 2 years ago when you were doing the Finance Act of 2023. And you raised this question. We are establishing a housing levy to help us with affordable housing. But where is that money going? And although we insisted that we adjusted the budget on the other hand and increased the budget for settlement for housing to go to affordable housing, the courts expressly told us, no, you cannot do that. If you are setting up this, you must set up a fund. So don't you think then, Waziri, you should have set up the fund, or we should have brought this to legislation, a session of paper, or a regulation or a bill now creating the fund, so that Kenyans can be certain that this money is not going to go to pay debt or to pay salaries or pending bills, but it will go to a strategic assets, as you've told us in your presentation. It's one thing to say that if you read in the session paper, they're saying this money is going to investment in key infrastructure projects like roads, airports, energy. It's one thing to say, but I think we also need to protect you to make sure that that money actually goes to where you are saying it's going to go. And I think the easiest way would have been to establish a fund either through an act of parliament or through regulations, so that at least we can guarantee Kenyans that that money is not going to pay for mandazi and tickets and recurrent expenditure, but it's going towards development. Maybe you may respond to that. And just to acknowledge, you have three members who are joined us online: Honorable David, Honorable Barango, and Honorable Tipila. And we will give them a chance to ask their questions after you respond to these questions. Over to you, Azir.
Thank you, Chair. Chair, it's quite something. But fortunately, some of the questions I think are repeated. But let me first address the issue that has been brought by two members, whether Sol has converted into Paul and whether I'm still having the characteristics and the figure of the ODM chairman that I used to be. I think even if you look at it biblically, there was nothing really wrong with Saul becoming Paul, because I think he got better. And of course, this is a cabinet secretary, national treasury, and not a minority leader in the National Assembly or opposition politician in the National Assembly, whose mandate and role was to critique the government in terms of delivery of services to the people. That's the mandate that I was given then. And if I did it differently, I would have failed Kenyans. Right now, I have a different mandate to run the National Treasury. I cannot continue to be an activist. And so I have to...
Point of order, Chair. Point of order. The CS implies chairman of PAC and leaders in opposition are activists.
No, you see, today I would not be a member of parliament. So if I did exactly what I was doing in the National Assembly, I would be branded an activist, because I don't have the local standard to sit in parliament. As a member of parliament, you are playing a different role. That's what I wanted to explain. But again, I want to just give confidence to Honorable Ariku that I have not left ODM. I'm still a very strong member.
And Waziri, respond to the chair. Don't respond to Honorable Ariku. Yes, you respond to the chair.
Through the chairs, let me say...
You may need to tell us the content of the new MOU coming up that will be implemented by May.
Yeah, I actually still belong to the Orange Democratic Movement Party, which is in broad-based government with Kenya Kwanza, and so has donated experts to the outfit, which is the Kenya Kwanza government.
I said Adam Smith is our Adam Smith is now behaving differently as an executive.
Honorable members, please let's give Waziri
a chance. So that's, I just wanted to explain that.
It is very weighty matters. Let's not downplay them. Let's give Waziri the time to really respond to those matters. Because not just responding to members, he's responding to the country. And it's important that Waziri is given a chance to explain to the people of Kenya this particular process. So please, let's not downplay it. So Waziri, please respond to those matters as raised by honorable members. Proceed.
So, Chairman, I wanted to just, so that I don't lose my focus. The first question from Honorable Ariku was on the issue of the interests of the minority shareholders, if I got it correctly. And fortunately, a number of other members have also raised the same question. But I want to point out clearly that that requirement to go to the minority shareholders through AGM to disclose would have only been necessary if there was preemptive rights that was being enjoyed when we talk about Safaricom. But Safaricom is a listed company. And once you are a listed company, then the preemptive rights don't apply because it is known and assumed that the market prices are controlled by the market. And therefore, there is no risk that you run of compromising the interest of shareholders. The other thing is the value is still maintained. The value of the company is actually still maintained. And so there is no risk of loss by the minority shareholders. If anything, chances are that the value may even go up. So that provision of law was there to protect the interests of minority shareholders where decisions that would be made would be counter to their interests. So that is what I would say on that particular issue. The second issue, why not 10%? Why 15%? First, you see, there is a reason why we are going to the market to raise funds, and that reason is to set up a machine, to set up a national infrastructure fund. As a government, we are projecting that we want to raise about 500 to 600 billion as seed capital to start the national infrastructure fund. And therefore, we are looking at our assets and making a decision based on how much we can get from each asset. And then based on that decision, based on that information, we take decision. That's why we are going to issue IPO on Kenya Pipeline Corporation, and we are going to make a decision on how much to offload based on our requirements and what we think we should continue retaining. It's a strategic decision. In fact, that also answers the question why we are not going the full hog and to offload the entire 35%. It is a strategic decision that we are taking because, again, selling 35% would be in the region of 476 to 500 billion. That's not a small amount that you'd easily get from one investor or even a few investors. And again, if you offload too much, how much would you be able to negotiate? We decided to retain 20% strategically, but that does not mean that tomorrow, if we see the need, and I want to put it very clear, so that when it comes again another time that we are offloading more shares, Kenyans should not come up and say that we said we were only offloading 15. 15% is what we are offloading now. That is what we are divesting now. But a decision can be taken again in future by this government or any other government. Remember, the previous governments have also offloaded shares in Safaricom. This is not the only government that has offloaded. Probably the only government that didn't offload shares in Safaricom was Uhuru government. But Moi government offloaded shares in Safaricom. In fact, Kibaki government offloaded even more. And no one talks about it. They're saying this government is selling. Kibaki government that was hailed for making economic decisions that Kenyans believe up to now are good economic decisions, offloaded more shares than what we are presently offloading. And so there's nothing really wrong by divesting, so long as the money is put into proper use. And I will respond to that because it was also another question that was raised. In terms of openness and accountability, and I've been asked, was there openness and accountability? I want to say yes. First, when we were doing the 2025-2026 budget discussions, chair now, I want to repeat again that this is one thing that I canvassed and I led from the front. My team at the National Treasury, we talked about possibility of going for other innovative ways of financing our budgets, and we talked about divesting in Safaricom. We talked about KPC. We even talked about the other assets like KenGen, where we own about 70%, and those are discussions that will come. So this is not something that is catching Kenyans by surprise, unless you are not keen on our public participation. But I also say that right now, you are carrying out a robust public participation where Kenyans are going to be informed, because we have not concluded the transaction. Yes, this is just the early stages of this process. We made the announcement, then we got the cabinet approval. After that, we went to the National Assembly, and now it is sitting in the National Assembly. After this, the next step will kick in, which is the regulation, or regulators will be coming in. And I think I was also asked why regulators come in after National Assembly. My understanding is that regulators are supposed to look at the compliance with the law. And one of the critical compliance with the law on divesture, especially Section 87A of the PFM Act, is parliamentary or National Assembly approval. So if we go to the regulators to seek their approval, they will approve subject to or conditional to National Assembly approval. So instead of going to them to approve subject to, we go to them after the National Assembly has considered and made approval. So that subject to or conditional to does not apply. That is the understanding of the National Treasury. On whether, I think I've talked about public participation, although when I mentioned about voting at the ballot, I think maybe it was understood out of context. But I want to repeat again that I believe that Kenyans should now start engaging more with the manifestos of political parties and to appreciate that while taking the vote at the ballot, so that you don't come again later after you have given the mandate to an administration which is explicitly put in the manifesto, and then that administration starts implementing the manifesto and you start critiquing again. So it means then that at the voting stage, either you didn't understand what you are voting for, or you have chosen now to change your position. And that happens because even running mates change perception when they are more exposed to the manifesto. Actually, one of the opponents of this process is actually the former running mate of Kenya Kwanza, presidential candidate. And I assume, and fortunately I was not there, I assume he was fully briefed on the manifesto, but maybe he has forgotten because that is also allowed. Now, whether our data is safe, there is security, and this is going to control our security interests. I want to also, again, put it that when it comes to the operations of Safaricom and how it, and the interface and how it connects with our security sector, and even other national assignments like how we use it in the electoral process to enhance our democracy, the share ownership or the shareholding does not really apply or help. I'm a shareholder of 35%, but it is unlikely that I would influence the operations of Safaricom. What influences all the engagement in terms of security and data protection are our laws and the regulations and the legal framework, and which is robust. And we have regulatory authorities. And I gave an example of how Safaricom had to reduce some charges during COVID, and how even they've been used in helping support our electoral process. It has come out of regulations. The Communications Authority has been very critical, and that responsibility is still going to be executed. And again, it is not just Safaricom that is in this space. It could be the giants in the room, but we have Airtel. Airtel is also having access to our critical data, and it is 100% foreign owned, 100%. And there has been no breach of our data security. I have never heard of any breach. The same way Safaricom is regulated is the same way Airtel is regulated. And so that tells you that ownership or shareholder ownership does not apply when it comes to security, data protection, and all that. It is our laws, the data protection law. We have also the other legal framework on competition is properly regulated, on security is properly regulated. What is the guarantee that the funds, that is now Honorable, I think Yeah, the ones that I was responding to were raised by Honorable Kirwa. Yes. Now I'm on Honorable Manduku's questions. Assurance that the funds will be ring-fenced for infrastructure and not be used. Yes, the truth is that the Article 226 will apply here because the money will first go into the consolidated fund. But, Chair, I want to also make it very clear here that the fund is already there. We have actually set up a limited liability company owned by the National Treasury as at now. I am the single shareholder of that company. And I want to put it clearly that the money that will leave the consolidated fund into the National Infrastructure Fund, which is a limited liability company, will be appropriated by this House, the National Assembly. There's no way the money will go into the fund without being appropriated. We have made a commitment as a government that the money that we are going to raise, and I want this to be very clear because I had a lot of concern that this money is going to finance the budget for this year. Far from it. This money is not for budgetary support. This money is not to fill our fiscal deficit. This money is going to be used exclusively to set up a seed capital national infrastructure fund. And by the way, for comfort of this House, these committees, and people of Kenya, we have communicated this. And you don't have a conman as a CS National Treasury. So I cannot say that the money is going to go into the National Infrastructure Fund and then tomorrow we start using it the other way. The executive has engaged and we have said not even a shilling will be spent on budgetary support. We will not spend this money on paying pending bills. We are not going to spend it on even capitation. How it is going to help capitation is that we are going to take out some infrastructure projects which would ordinarily have been financed through the budget. We are taking them off and freeing space for other social services like health, capitation or education, and the others. But we are not going to apply this money directly. This money will only be spent, the resources that we are raising out of this fund, is going to be spent on only commercially viable projects. And by the way, one of us, I think, asked this question, where are these projects? Each ministry, each state department, which we have identified, have been given the responsibility to generate commercially viable projects, and the list is already prepared. And some of them the President read during the State of the Nation address. But I will tell you, we are going to fund roads, but only roads that can be tolled and roads that are commercially viable. The other roads will continue to get support through the normal budgetary support. Two, we are going to target energy, transmission, generation and transmission. And we are going to add to the grid megawatts that would help this economy to jumpstart to the next level. The third area I talked about dams and irrigation projects. We are going to invest in those major dams or mega dams, which then will be productive, commercially viable, that we can again commercialize and generate revenue to pay back this fund and pay the private investors, the institutional investors, which will be crowded in. Because this fund we are using is as a seed capital to crowd in, to de-risk investment in public investment. The reason why we are doing that is public investments by nature are risky. And so many people are reluctant to get in because of the risk element. So we are de-risking by providing or covering some of the costs and then inviting other players from the institutional investors who come in and invest. So lastly, I talked about the airport as well. So comparing it with the housing levy, I think there's a difference. The housing levy, there was no fund. This one we have already enacted. We have already incorporated a company. So we are just working on how to make that company, to actualize it and make it operational. And we are moving because already we know you are also, Parliament is moving with the approval. And I'm sure before we finally conclude this transaction, we will have this company up and running. So why divest only 15%? I think that one I explained. It is a strategic decision that we are taking. Honorable Ruto asked me about that we spent about 3 billion in the Ethiopian market, and now we are receiving 200. I think the two are not really too linked together, because that was a capital investment taken, the decision was taken by the company as a going entity. We are in a process of divesting shares into, in the company, changing shareholding of the company without really dealing with the investment that is in one particular space.
Maybe, Chair, so that it clarifies it. I'm looking at the value, the rationale of the value. Like going into Ethiopia spending 130 billion, the outcome in terms of value and the valuation of Divesture at 204 billion at a local market or domestically here. Try to look at that, because the question here is the rationale on that value. Are we undervaluing? Because expenditure there to get what we are yet to know. In fact, the story is the subsequent dividends went down because of the performance. But company spend 130 billion. Now here, from the same company, the valuation of those shares in the same company, for us, we are valuing at 204. Don't you think 204 is way too low as compared to the risk of going to Ethiopia?
I think going into the Ethiopian market was basically about taking advantage of the opportunities available, and it was a strategic business decision that was taken by Safaricom PLC as a company, looking around and seeing a market that is untapped and moving in there. There are risks. You could get it right, you could get it wrong, but it's a business decision, and I think it will come up, or it will pick up with the time. Of course, when you invest, there is usually the slow period, and then it picks up. The difference with Kenya was that this company started small here, so the earlier or initial struggles was not so noticeable until now, when it started getting bigger and bigger, and then we made it a bit more private. Now, on this sale, we did not even consider the Ethiopian market. We basically used a pricing model that was based on known valuation methods that can stand the test of time. So I don't think the two are so related, and Honorable Ruto. On what guarantee do we have that this will help us bring down fiscal deficit in future? Actually, we have done some calculation, and we have found that if we successfully take out some profitable or commercially viable national infrastructure projects from the budget, at the moment they are amounting to we are spending about 300 billion shillings on infrastructure projects that are commercially viable. That could easily be taken out. So if we implement this program the way we have intended it, and we get this money through your approval, and then we put in this fund, and we take out the commercially viable projects, I would guarantee you that we are going to reduce, or rather take out, about 300 billion, which money now, either we will reduce our borrowing, or we can redirect or channel these funds to those underfunded but critically important services like education. And I keep on repeating that we are underfunding education. It's not something that started yesterday. It has been what we are doing over the years. And we need to put more resources to education, because it's a serious investment. On dilution and repatriation of dividends, even right now, the 40%, Vodacom, of course, gets back their dividend. And that is one motivation. Any investor would want to invest in a country and get back the dividend. So it is not anything wrong for an investor to get. In fact, one of the attractiveness of a country or an economy in terms of investment is how easy it would be for investors or foreign direct investment to repatriate or get back the return on their investment as and when that time comes. Public participation is a requirement, moving to cabinet and going into the market. I think I've explained the level of public participation that we did, and that is continuing. Actually, there's no more public participation like what we are doing today. I am very sure that the proceeding of this joint committee is widely followed in this country. That I guarantee you. I am very sure if you go and check, probably it would be trending #1 by the time we are done with this discussion. And what better public participation would be, would be more than that. So I want just Kenyans to listen now to the facts as they are, and then now make a decision whether we are doing the right thing or not. Because a lot has been said out there, including whether the price of the shares should be 75. Someone has spoken to that. And interestingly so, you ask, where is the 45 coming from? Another comment has been that the price of the Safaricom shares was 45 shillings in 2021. True, it was. But what led to that? If you know the functioning and operations of capital markets, the capital markets usually respond to signals and information. There was a major announcement that was made in 2021 that Safaricom was going to expand to the Ethiopian market. And that triggered a response, and the prices shot to 45. But then when now the investment became a reality, the prices even went down to 14 shillings per share in 2024. But it has peaked and stabilized. Why? Because now the shock again that the Ethiopian market sent, that it was not so profitable, has more or less stabilized the share. People who are interested, the investors, have realized that the company is even much more steady and stable. So the prices now are at 28, 29. I think, Honorable Makalap, you are right. Why are we in this position? We are in this position or situation because some of the decisions we made previously, a lot of them were wrong. We probably took loans, short-term loans, not very long-term, some 5 years, 6 years, to invest in projects that would take 30 years to pay back. And so we are the generation that has to suffer that consequence. Probably the future generation, when now these assets start yielding optimally, may get out. But we have to stop digging the hole now, and we have to help that future generation in bringing back the economy to where it should be. I think I responded to this process going to the consolidated fund that I responded to. Whether two partners are agreeing, Vodacom and all the rest, but again, if you have asked whether Vodacom may decide to buy the shareholding of the minority shareholders, that cannot happen until they get approval from the regulatory authority, bodies. So they cannot just decide because they are the major shareholder, we are going to buy everybody out of town. No, that has to be regulated. I think I talked about data protection, future governance. And let me be clear, the 3 years is not about the governance. The 3 years is only covering two agreements. One on staff, that we are not going to, there will be no staff redundancies until after 3 years. And the more reason, actually, why we went for this established partner who is already in this space, so that we safeguard this business disruption. If we went for someone else, again, there would be possibility of that disruption. But because we are dealing with someone who already is in this space, and the person, the partner is already having 40%, you expect minimal disruption. So it is just touching on the redundancy, staff redundancy, and the suppliers. But on governance, we have a firm commitment on maintaining the governance, including the executive, chief executive officer, and the board membership is remaining for, it is not pegged to 2 years. And if there has to be any change, then the government of Kenya has to be, to approve the same. Yeah, I don't know what was asked about regulatory authorities, but I think it's the same thing that I've asked. On Honorable Mbadi, non-performing assets. Yes, I know that there are non-performing assets that we have, those which are draining the exchequer, but we are dealing with that differently, separately. We have merged, actually at the moment we are merging some parastatals that don't make sense We have been having multiple parastatals. We have merged some of them, like the Tourism Fund and the Tourism Development Fund. And we have merged them now, and many, many others. And some of the parastatals we are doing away with. And so that is a separate reform that we are taking, but we are also looking at those assets that are there. In fact, I want to agree with you that non-performing assets, some of them we give up for nothing, because we will be saving a lot more. There is opportunity cost that goes with this. Why is sale before infrastructure fund? I think I've responded to that. Protection is only 3 years. I think I've responded to buyback of the shares. If our strategy changes, because right now the strategy of the government is to divest. We don't want to again get into the business of getting more commercial enterprise. But if that changes for whatever reason, I think that possibility is still there, and it will be negotiated at that time. Are we going to utilize 200 billion? I think that I've explained. This is not a budgetary provision resource. It's not a revenue that is going to support our budget for 2025, 2026. This money is seed capital going into a fund that is going to be there for perpetuity, a fund that will be there so long as the people of Kenya decide they still need it. Whether we are negotiating at weaker point, I don't think receiving dividend in advance is unique to our case. This is something that happens in many, many other similar transactions. And we did not go like begging for dividend. It was just part of our negotiation that we asked we could get dividend well in advance at a cheaper cost as opposed to if we went to borrow money in the market competitively. So that explains why I think Honorable McLeod, you're the one who asked about, no, Mboni, you're the one who asked why go for this 500 billion and which particular project. By the way, I think if credit was to be given to us even before we start, this is the only funding that you will clearly see which project it is going into. Because we have deliberately said this fund is going to be seed capital and ring-fenced for commercially viable projects. We will say, yes, we are putting money in JKIA. How much? It is costing 200 billion. We are putting 20%, say 40 billion. 160 billion, we open it up. Those institutional investors, both external and internal, can come in. We partner what we call blended finance, and we do the airport. So every Kenyan will know that this airport that we have, 40 billion came from National Infrastructure Fund, unlike today where we mix or commingle resources. So I think to me that is a plus. Transaction advisor is receiving 500 million. Kenya shilling, someone I think mentioned, I think not really someone, Honorable Mboni. But what I'm saying is that this is KCB Capital, yes, is the advisor. And the charges is regulated by CMA regulations. And again, look at it also this way. If a transaction advisor succeeds, we are selling how much? We are selling 6 billion shares. If a transaction advisor even just manages to negotiate a further 1 shilling per share for you, how much do you get? You get 6 billion shillings. If they negotiate additional, like right now, if the amount is 28.5 billion and they negotiate 5 shillings, I mean 28.5 shillings per share, and they negotiate another 5.5 shillings, that would give you over 33 billion shillings. If you pay them 500 million, compare that. So transaction advisors, and Honorable Mboni is wondering whether you should leave politics and go. By the way, I would advise you to do so. Politics doesn't pay. You know it as I do, that all the money you earn, you spend it in the village. It doesn't pay. Where if you could get space to some of these and be an advisor, my friend, you'll be financing some of us politicians. You'll have much more money. Here you are wasting your brain. We are all wasting our brains if we get that opportunity. Now,
we want to take a question on transaction.
Yeah, the issues of transaction advisor, I think they are guided. As Kenya, as Treasury,
were guided by Organization for Economic Cooperation and Development, which has pegged it to 0.5% to 1.8%. CS, what is 1.8% of, what is the transaction? 2 or 4?
So you have answered yourself. Actually, don't even go to 1.8. 1% of 200 billion is 2 billion. Way above the 500 million. It's just a quarter of it. So even if you look at it that way, still, on the Barrico, we are.
But Waziri, the 500 million was more of a question. So are you confirming that the transaction advice is being paid 500 million? Is it 2 billion?
Actually, the 500 was an example of telecom transaction.
Yeah, I think we gave that figure, the percentages. No, I was just responding to him as he asked. But you see, we have not hidden anything here. We can provide the brokerage fees, which is 1.36%. So that is the brokerage fees. It's still within the 1.8% of Honorable Rico. Yeah. Pardon? Can I proceed?
I think, Chairman, the Minister needs to inform Kenyans that in this particular transaction, the advisor for government, for your side, is KCB.
That's what I said, KCB.
And their take is 1.something% of the transaction, which will actually come to around 500 and something million.
Actually, we have various transaction fees. We have CMA transaction levy, which is a small percentage, 0.012. We have an NSE transaction levy, again 0.012. CDSC transaction central depository levy of 0.08. Again, guaranteed fund of 0.01. CMA compensation fund 0.01. Then brokerage fees is 1.36. But it is KCB capital, which again, we also have a stake in KCB, and we all know as a government. But on this one, it was arm's length transaction.
But was it maybe help respond to this question that Kenya is asking? You have made it clear in your presentation that it was a negotiated sale between Government of Kenya and Vodacom. Then if that would mean that it was DOK here and Vodacom here agreeing on this particular transaction, so then why then would we need to engage a brokerage firm and pay them, I think that will be around 3.3 billion shillings when it looks like it's a direct sale from GOK to Vodacom? Why did we need to engage a brokerage firm and pay them in excess of 3 billion shillings?
But Chairman, for us to even arrive at that negotiated price, we needed a professional transaction advisor. Otherwise, we wouldn't have been able to, because even the valuation and the calculation on how much, all this was done by a transaction advisor, and I read them. So if we just went to negotiate, these are shares in a listed company. I'm being careful because I would be accused of being insensitive. I don't want to use a goat. Maybe I use fish because now no one will accuse me of some ethnic whatever. It's different from going to the lake and asking, I want to buy this fish. You have to have a basis and a solid one. Otherwise, you would be asking me, how did you arrive at 34? If there was no proper valuation done by technical people, it wouldn't have, it could not fly.
So maybe another question. The engagement of this transaction advisor was contracted by Government of Kenya. So the other question would be, we saw it on the KPC, the Kenya pipeline, the transactional advisor was competitively sought for from the market. So was it done competitively for this transaction advisor for this particular sale?
No, on this one, I think we have our list of transaction advisors, but we didn't really need to go and do competitive bidding on this, because we have, by the way, even on the side of Vodacom, They also had a transaction advisor. They used Stanbic and we used KCB. And the two negotiated for us. We only approved, so they are asking us, this is what we have settled on.
Was it the only risk of giving the example of Vodacom? Vodacom is a private entity. They can do what they want. But now when it's government of Kenya, we have the PFM Act and we have a Public Procurement and Disposal Act that should guide the process. It's not like Vodacom. Vodacom can decide whoever they want to engage. But if it is now being done by GOK, then there is a laws of our land that we must follow. Maybe even KCB is also not a government entity. So maybe had you used any of the government entities, then you will say you have used another arm of government. So this is a private entity. Then why then didn't you follow the competitive process like you have done in the Kenya pipeline privatization case?
Or additionally, Chair, what does the department in charge of public investments in the National Treasury do, if not to help with the determination of such issues?
Pardon?
There is a department with a PS in charge of these public investments, isn't it? I mean, what does it do if not to advise on such issues?
Yes, and maybe perhaps to put it in differently, the National Treasury has very many competent officers of different qualifications, including you call them what, borrowed experts. So I think you probably need to explain to Kenyans more why, despite having all those people in the National Treasury, all those advisors, then you have to go and get different advisors to advise on this particular transaction, and how you also got into them, because maybe we would have got a different advisor at a lower cost than the 3 billion shares that we paid, that we're going to pay for this particular advisor.
Chair, maybe I need to ask it through you. Talking of KCB, initially KCB was almost fully owned by the government of Kenya. In the spirit of direct procurement as provided for by Public Procurement and Asset Disposal of 2015 and its regulations on the methodology of procurement, how does KCB satisfy that condition? How many percentage of control or ownership is government of Kenya owning in KCB to be regarded as a government entity and qualifies direct procurement?
Just to help you there, CPA, yes. KCB is a private entity. Yeah. By all manner of definition, yes, it's a private entity. Over to you, Waziri.
Yeah, so Chairman, I wanted to also make it clear that there are, when we have transaction advisors, a lot of time we have running contracts with these transaction advisors. And when you have running contract, you can directly procure the fiscal agent, in this case KCB. And this is not the only time. In fact, even when we float Eurobond, I remember because we had a running contract with Citigroup, we had to again engage them. We didn't have to go again and retender. We just use the running contract that is going on. And in that case, like KCB, we have a running contract as a fiscal agent with them, and we could go and do direct procurement. And I don't think there is any law that we violated there. And we were, of course, advised by the Attorney General that we can go that route. In terms of whether we have the competence in the ministry, yes, we do. And by the way, they're the ones who advise us on what steps to take, including what we are doing here. And we have a State Department now, where the PS is sitting on my right, but I'm still the minister. Despite all that, I'm the minister of all these people. We have the PS on my right here, we have another one on my left who will be receiving the money, and another one who is not here who will be planning how we should do development. But the CS is one. So that's why I'm speaking for all. So it doesn't mean that we don't have capacity. All this information I've given you, I've actually been lectured, I've basically been taught. It's only that, fortunately, I understand. So sometimes, you can also have a CS who will be taught and he doesn't understand.
Actually, Chairman, from my experience working in government, the government officers advises their advisors. They have more information than their advisors. It's only that they probably don't have time to sit down and put up the documents.
So
And also the believability. You know, let me tell you, Chairman, and Honorable Mboni, you're very right. And having been in that space, I think you have that experience. Let me tell you, if we could do a fantastic job as a ministry, and if we didn't have a transaction advisor, it would be a problem. Because we would have been asked, who told you? But now, at least we have a transaction advisor. Just like a doctor, you can be a perfect and excellent doctor, but you can't treat yourself. So at times, you need to visit another doctor and get. Yeah, so let me move to the next one. I think Honorable Mboni has talked about 55 billion being a loss. No, it's not a loss. We have received the money well in advance, and we think we have got value for receiving the 40 billion as we forego 55 billion. Honorable Paul here has asked about whether we have already made up our mind to sell to Vodacom. Well, we have negotiated and we have put it before Parliament that this is what we have negotiated. So it is now, I'm at the mercy of the National Assembly. I have not made up my mind in any way. I am just pleading. A very innocent CS who has come begging from the National Assembly to agree with me that we need to divest 15%. You also asked about why 15%. I think I answered that. Whether this will alter ownership structure, it will not alter whether we thought Safaricom board was consulted. Yes, the decision was taken at the board level. And by the way, when I was announcing this, we announced it jointly with the president. Is it the chairman or the president? They came all the way, actually, from South Africa, and we made the announcement together. And Vodafone Kenya Limited was there. Everybody was there. So the board has taken this decision. Our representatives in the board is Kibet here is our representative in the board. They took the decision. How will this, Honorable Mudama, you asked me how this will obtain, whether there will be continuity in this, that now we are taking this decision to divest, what will happen, are we going to exhaust ourselves? That is why we are changing the structure here. We don't want to offload these shares and consume the money or spending to support the budget. What we want to do is to build a seed capital that is going to be invested in infrastructure that A, will spur economic growth, but also are commercially viable, and therefore there will be returns back into this fund to make this fund be in perpetuity. This fund will operate like if you go to other funding models in developed countries, you'll find they are funding heavy infrastructure projects. In fact, if you go to the developed world, none of them fund their infrastructure from the budgetary provision. They fund them through such kind of models. And we are not selling everything to eat. If we sell everything, we will sell everything to invest in another set, which is now the public infrastructure projects, which are commercially viable. Safaricom extending to Ethiopia, and I am speaking like the chair of Safaricom. Yes, I am speaking as a very serious shareholder of Safaricom, who has 35%, and I must speak about my company. Safaricom is actually my company. You know, that is one thing that many people don't appreciate. I own 35% of Safaricom, and it is in my name. You know, it's only that the CS then was not John Mbadi, but it is in the name of the CS, National Treasury. So I'm a very serious shareholder.
Maybe you need to complete the sentence and say holding interest on behalf of
yes,
the Republic of
but you know, when you are working on interest, even the chairman of Safaricom or Vodacom or whichever entity speaks for the shareholders. He's actually working. It's a trustee and a relationship. So, Honorable Yula, we are not sure yet because of the funds have not been that it will go to the consolidated fund. I would only repeat again that Kenya, I believe Kenya does not have a con man as a CS National Treasury. And I don't think we have a con man as a president. And I don't think we are conning, that we have a conning cabinet. We have said that this, not even a shilling out of this money will go anywhere else apart from the infrastructure fund and sovereign wealth fund.
A point of order, Chair. Chair, maybe I read the provisions of Article 206 so that the CS can get what we are looking at for us to decide. Because this issue of fund is a very major issue for our decision-making, Honorable CS. What it says is that there is established the consolidated fund into which shall be paid all money raised or received by or on behalf of the national government, except money that is reasonably excluded from the fund by an act of parliament and payable into another public fund established for a specific purpose. You see how the issue is major. Because I get the CS to be saying the money will initially go into consolidated fund, and the CS has confirmed there is a company which is already incorporated, in which is the sole shareholder currently, and then the money will somehow end up in infrastructure fund to deal with critical infrastructure. This, yes, if that linear, explanation is not made, particularly at what level of the chain Parliament, especially the National Assembly, will involve, it leaves us with, a whole situation about how we are going to ensure these monies actually go to these good objects we are talking about. And we agree we need to facilitate the very good objectives that are being stated here.
Honorable, you have a follow-up on that?
Yeah, I have a follow-up question, Chairman. I like what the member for Mbadi Town has said, but there's a word that is causing me concern. The CS is no longer talking about critical infrastructure. He's talking about viable infrastructure. And historically, CS, when you start talking about viability, then again you are going back to the commercial cycle. Our biggest concern as members here is addressing inequality in development of infrastructure in this country. Roads, water, energy. And it was it. How can you convince those members who represent areas where we feel that there has not been equity, and then use the same viable in the same sentence? Are you implying that this fund is going to be commercial in nature, or target areas where out of tolling, then you can make a business case and say, this is a business enterprise? What we need is an assurance that this fund will, among many other things, address the inequality that we've had, marginalization, and historical injustices in infrastructure development. I come from a constituency which has not had a tarmac road for 21 years. Some people here have having tarmac roads every 5 years. How will this fund sort that out?
Yes, and maybe hold on, Dr. Ariko and Honorable Bego, and Honorable Boni also want to follow up. Waziri, I think I want to disagree with you on this issue of the fund, because when I raised the matter, you answered that you already established the fund under the Government-Owned Enterprise Act. The Government-Owned Enterprise Act was processed by this committee a few months ago. And if I read to you just the objective of the bill, the objective of the law, an act of parliament to provide for the establishment, control, governance, performance, and ownership of government-owned enterprises, public service obligations issued to government-owned enterprises, facilitate the reconstruction of existing government-owned enterprises into public limited companies for the transfer of assets, liabilities, and the business of government-owned enterprises to companies and connected purposes. The understanding, and if you read the various sections in the bill was those commercially viable projects that the government would want to do, let them be done by this vehicle. But the definition was read by Article 206 by Honorable Kaluma here of the Constitutional Border Fund is that this will be a public fund. Therefore, you cannot take this money to a body that's supposed to do, what do you call it, companies, a business, and call it a public fund. So I'm not convinced on that, and unless we amend the PFM Act or the Government-Owned Enterprise Act to provide now for that you can actually now create a fund within the Government-Owned Enterprise Act, then your explanation does not hold water on this particular matter.
Thank you, Chair. Chair, I think that's what I wanted to say, but the CS is taking us back to the sessional paper of 1965, where resources were targeting economical areas, where the government is going to gain a lot in terms of revenue. I thought this fund is there to address areas or recover areas that have not been benefiting a lot in terms of infrastructure. Like for the Turkana County, the only tarmac road we enjoy as a county is the highway from Mombasa up to southern Sudan. That's the only tarmac road we can see in Turkana. And yet this fund is targeting viable areas or areas that can generate money for this country. Please, yes, this fund is meant to address the issues I've raised. Turkana County does not have a tarmac road other than the highway from Mombasa to southern Sudan.
Chair.
Be on the same. Yeah, you know, public money is supposed to be used for public good. And public good is not supposed to be chargeable. So now when you are telling us these funds are going to be used for commercially viable projects, I start wondering. But my concern is, are we going to see this project come into Parliament for approval so that we can address the issues of inequality? The issues of inequality. In the Vision 2030, there are projects which to me I thought they are very viable to this country. For example, the Grand Falls Dam in Tana River. This is a project which has been in the works for many years. And I'm just wondering, if you are going to do that project, how are you going to charge drinking water to poor people in that region? So I think it's very important you clarify that before we move forward, because I also have another two other clarifications on that.
Can I just maybe make clarification?
Yes, maybe let's give us
on this fund.
I don't ask the same question.
You see, let's be clear here. This fund is not meant to cure inequalities in our regions. This fund is supposed to be used to take out of our budget commercially viable infrastructure projects. Let's start from there. If you look at the sorry, I don't know why I keep on calling Kenya Kwanza Jubilee, God forbid. If you look at the Kenya Kwanza manifesto, this is what it says, Chairman, and I'm happy that one of the chairs was a member, prominent member, still continues to be a prominent member.
I am a life member of UDA.
UDA.
Yes.
It says infrastructure bank. An infrastructure fund will be established with initial capitalization from privatization proceeds with a view to progressively reducing the financing of commercially viable infrastructure projects from the budget. So the aim of this fund is to take out of our budget commercially viable and leave projects, infrastructure projects that are not commercially viable to continue enjoying budgetary provision and budgetary support. If we make a mistake of allowing the use of this resource to finance what we call loosely critical, you open it up again to political manipulation. Because now who decides which is critical? It will be again John Mbadi at the Treasury deciding a road leading to my bedroom to be critical. And I will develop it because the architecture of the fund does not stop me. But if I do that with this architecture in place of commercially viable, I will have to justify and explain how the road leading to my village is commercially viable. That road leading to my village should still be done, but it should be done off this fund, but through the budget.
The only difference is there is a big difference between what you are telling us and what is in the sessional paper that we are processing. So the sessional paper, okay, this is the presentation by the Cabinet Secretary on partial divestiture, page 4 of what you just told us.
Yes.
1, provision of funding for critical and priority infrastructure investment. So unless now you want to retract this critical
no, actually,
area submission
yeah.
for commercial viable. And I think from the word go, you're saying this because as we do extensive public participation across the country, unfortunately Kenyans will be asking us these questions, and they'll expect us to respond and answer them. So we want to iron out on what all these gray areas are so that we are clear. So for example, in your presentation, you're saying that provision of funding for critical and priority infrastructure investment. You have said that again, that what you are saying, that's not what you meant, that's not what you're saying. You're saying we're not going to do critical projects. We are going to do commercially viable projects. So I think you need to be clear on what projects are going to be done. In that case, one of the earlier discussions we've had, I think we may have to have another engagement on this so that you also tell us what these projects are. You know, we're saying we need our airport. Agreed, we really need a brand new airport like yesterday. We need all those highways that you're talking about. But as this committee goes to do public participation and civic education, I think we require you to give us what these projects are, so that when you're telling Kenyans that we are selling your stake, your 15% stake at Safaricom, then the question is, you are selling to finance what? So is it critical? Is it commercially viable? I think we will have to need a list of those particular projects so that we are clear.
Chair, the critical may not be commercial viable.
Let me make it clear.
Yes, just make it clear.
The intention of the government.
And actually, Waziri, it is the wording of critical priority infrastructure projects is also in the actual session of paper that you're seeking us to approve. So you are asking us to approve for funding of critical and priority infrastructure investment. So unless then you retract this session of paper and bring us a session of paper that talks about commercially viable, then this is what we have before us, Mr. Waziri. Sorry, Honorable Umi.
You know, when I hear the word viable, I remember sessional paper number 10 of 1965. And CS, we spoke to you about this as Northeastern leaders, and you assured us that under your reign, that is not going to happen. So what is the criteria that was used to assume what is viable and what is not viable? Because I know when you first presented, we did not see any word of viability. When you spoke about agriculture, then I said, now this is going to be good for me, because then I know I'm going to be commercially viable. When I have big mega dams, when I have irrigation going on in my vast land, especially Mandera. But Honorable CS, this is really, really scaring me, because we can actually invest and attract investors who can do PPP in that barren land that has been long neglected, that is not commercially viable, according to some people who decided that Mandera or Northeastern, for that matter, is not commercially viable. Please be clear, because before we even leave here, an hour between your first presentation and now, we're already hearing a word viable. So how is it going to change tomorrow or any other day? The more reason, Chairman, we need to have this fund. We need to have this fund, Chairman. Why? Because you have always been commercially viable. Chairman, the more reason why we should have this fund so that we ring-fence for the purposes it is intended for. Because Chairman, remember when we were dealing with finance bill last year, and we had the edible oil guys appearing before us, and they said how simsim and sunflower seeds can grow in 3 months, and how they really need it, and how it can be good, and they can partner so long as the government has the goodwill and invests in irrigation or big mega dams, because they can't do mega dams if the opportunity is there for them or the foundation is there for them. That is when now they can invest. But if the commercially viable continues, then I'm sorry, we're still in the era of sessional paper number 10 of 1965.
I just draw the difference between this and the sessional paper number 10.
Just switch off your mic. Just allow members to ventilate or to share their views on this, and then now you have a good chance to respond. Honorable Paul, you are up, then Honorable Makilap, then Honorable Kwanya, then respond. We have all the time, Waziri. Waziri, you are going to make this presentation for us for half a day. We are going to process this for the next 1 month. We are going to 29 different counties doing this. We need to make sure we get it right. So, and we're not going to be there. But we must thank you. Waziri, nowadays, you're a good Waziri. You don't throw us under the bus. You walk with us. So, Honorable Paul, then Honorable Makilap, then Honorable Kwanya, and then Waziri responds.
Well, I have a follow-up question, but before I ask the follow-up question, I just want Waziri to actually give clarity on the threshold of these commercially viable projects and expound on it. Because in my feeling that there could be a confusion actually of how these funds are going to be spent, because of the absence of a dedicated fund and its governance structures to receive and manage the proceeds in line with the stated objectives, then there could be a problem. But the follow-up question, Waziri, I had earlier asked, and you have responded to one, but there are two other questions. Does the government possess any preemptive, contractual, or veto rights regarding the identity of the purchaser of its shares? That is a question I had earlier asked, but I want to add one more, that how will the two government board seats be sufficient to safeguard national interests? Because we will be having only 2 seats, and we are alive to the fact that the majority shareholder will now be having the majority voting powers. How are we going to ensure that the national interests are taken into consideration?
So, Honorable Paul, I see what you did there. You've asked additional questions, and we were on a particular matter. But anyway,
Chairman, I will be very specific to this particular matter. I think, Chairman, as you guide this particular deliberation, so that does not degenerate into the regions where we come from, and our thinking on whether our region is commercially viable or not, or otherwise, provide, as you say, Chairman, is that on this particular matter, Waziri, I think in this country we need both. We need both commercially viable investment that generates the critical revenue that we have missed for a long time, because in the other arm, Kenyans do not want to be taxed. So we need to invest any resource to anything that generates revenue, so that Mbadi and his team will be able to keep a balanced budget in Kenya. So in these circumstances, Chairman, we also need critical infrastructure, for example, in security areas. So we need both. And even in Turkana, it's commercially viable because there is oil, which will bring in revenue to our economy. So Chair, we just need the Cabinet Secretary to really bring what is called harmony on this statement, so in this sessional paper, so that his presentation and the sessional paper and the Kenya Kwanza manifesto are smooth and flowing, so that we need both critical infrastructure for certain areas, and we also need commercially viable infrastructure in other areas to bring the revenue. And I'm telling you, Chairman, there is no part in this country that is not commercially viable. Even the places that you think it is desert, like Northeastern or otherwise, there is something treasure hidden on it. And if you invest on it, it will bring in revenue to our country.
Lastly, Honorable Kwenya.
Chairman, this engagement is getting to something else, away from what our focus is on. And I just wanted to advise a little, if you allow, Chair. You see, for the areas that feel that they're marginalized, the Constitution has given those areas equalization fund. But having said that, Chair, having said that, Chair, I think this is an area that we need to really get into its depth. The issue of establishment of this fund, because that is where the contention is. You know, I listened to the Honorable Kaluma and what, Chair, you've just said, and I think it's only right that we just lower our interventions so that then we allow the CS to make it clear to us as to how that fund and the company, the fund and the company, you know, we need to have clarity on that matter, because I think that is the giant in the room.
Thank you. Waziri, please clarify on that matter of funds and the company and commercial viability and critical infrastructure. Proceed, Waziri.
Yeah, I think I want to be very clear on the objective and the intention of this fund. It is commercially viable, and I will explain. And I want to agree with, I think it was Honorable Makela who said, I think it is wrong for us to believe that there are regions in this country which don't have commercially viable projects. There is none. In fact, that is the mistake of the sessional paper number 10, which categorized some regions of this country as not productive. There is no region that cannot be productive. All regions are productive. If you've just talked about irrigation, if we can get water and irrigate some of the regions of this country, they may be more productive than those regions which rely on rain-fed agriculture. And the experience is there. And I'll give you an example. We have the Galana Kulalu project. Galana Kulalu project now, we have just done the first harvesting of the 1,500 acres. And each acre is producing between 30 and 35 bags of maize. And I will tell you that if we do the dam that Honorable Mboni was talking about, we are able to irrigate upwards of 200,000 acres. If you multiply 30 or 35, let's say 30, the minimum, bags per acre, times 200,000 and times 2, because you will be harvesting twice in a year. So you'll get 12 million bags. What is our shortfall in this country in terms of maize production? It's between 10 and 15 million bags. So Galana Kulalu project alone, if we put money there, and we invest about 40 billion that is required for that dam, you are able to produce enough food to fill the deficit that we have. And by the way, there are so many investors which are ready. So long as we can do the dam, the investors are there to buy that water, irrigate and pay us back. So that region will be commercially viable, and that project is commercially viable. And I will say here, Chair, that maybe I need to explain a bit how this fund is supposed to work. This fund is not supposed to invest into the project 100%. If we do that, we will only be able to do a few projects and the fund will be wiped out. We may not even have the capacity to do one project and complete. Because how much are we going to raise? If we raise 500 billion and we take half of it to JKIA, you'll only be remaining with about 250 or 200. And you can take that to a few roads and it is gone. So the intention of the government is to have this as a seed capital to de-risk and crowd in private investment. You cannot crowd in a private investor to partner with you in a project that is not commercially viable just because it is critical, or just that because you want to equalize the country. So we want this money to focus specifically on projects that have commercial viability, wherever they are found in this country. And every region has those projects. And by the way, there is no project which will be done without parliamentary approval. National Assembly will have to approve the projects, including the business plan of those projects. So they will be approved. And by the way, this is the first time we are going to disclose all the roads. We have talked about 2,500 kilometers. We will say which roads. We are going to say which are these 50 mega dams. We are going to say which are these power generation projects. Where are they? What is it? How much megawatts are you able to generate? How is it commercially viable? And then, Chair.
Waziri, the only risk there is to that.
Yeah.
I want to give you credit, and you have really given us confidence that you are not a con CS, and we agree. However, we don't know what's going to happen tomorrow. So our concern is, how do we make sure that this is safeguarded in law? Yes. So that irrespective of who is the president or is the CS or the PS tomorrow, that this fund is used for that particular purposes. That's why we are talking about a legal framework. We're saying you will come and disclose which roads. But in the current law, there is no obligation, because this is off budget. There is no law that will obligate you to come and report to the National Assembly what you're doing. And that's why now we're thinking about how do we make sure that is safeguarded in law, so that tomorrow the next minister for Treasury does not take this money that was seed capital from Safaricom to do something that is not critical or commercially viable. To us is thinking progressively in future. We safeguard it in law, not because we have confidence in you, because we might get another, there could be a reshuffle and you get another one tomorrow.
Actually, Chair, the more CS talks, the more I think we should not pass this thing. Because, you know, he has already said he has already established.
A point of order, Chair.
Just a minute. Just a minute. Let me
No, but Chair.
What is out of order? What is out of order?
But Chair, a member cannot say that when we are still, you know, in this process. Those are things we can say in our meetings when we resolve.
You anticipating debate.
Okay.
But to be fair,
what I'm saying.
Mbadi is in his right to say what his opinion is. Proceed on.
So, you see, don't be defensive. You have just joined government the other day. Now, okay. You see why I'm saying this? Is because he has already said he has established universal funds.
Could I please beg you, honorable members? You know, sometimes.
No, he's bullying.
Hold on, Honorable Kaluma.
Yes.
Please, honorable members, please desist from these exchanges, because unfortunately, the whole Kenya, every Kenyan is watching. And what is reported in the news is what you said off-cuff and what you said off-cuff, and we lose focus on a very important discussion of the Republic of Kenya. So please, Honorable Mbadi, withdraw what you said about Kaluma and proceed. And please, Honorable Kaluma.
Chair, has withdrawn both, because the point I was making is that
all of them.
this is not where we should say what our decision is going to be.
Okay, I will withdraw all of them. But you see, my concern is, he has already said he has established infrastructural fund, right? Already has whatever. So when you establish that, and I just want to say what the chair said, is there obligation to disclose the projects to Parliament for approval and hand award role? Because already the fund is established. So if we pass this today, how are you sure that we are going to get the list of the projects?
Yes, Waziri. Yes,
you see, Chair, the more reason why we have public engagement, and I want to say it here, that this is a sessional paper that will remain on record. And if there's any improvement that can be made, can still be made. But let me maybe make it clear here. What we have set up is a limited liability company, which has objects and articles of association. And the Parliament or National Assembly has all the rights to get a discussion on where is this, what are the legal framework of this company, and that we can come back and explain. But you see, when the money is received in consolidated funds, and Honorable Kaluma spoke about it, that the money, unless it is exclusively excluded from the fund through an act of Parliament, the only way you will get that money out of the consolidated fund is through an act of Parliament, which will be an Appropriations Act. Appropriations Act is also an act of Parliament. So the time you are doing the appropriation, then you need to have the list of the projects appended to this appropriation. But we will be moving the resources from the consolidated fund to the company, which company then now will get involved or will now start getting into infrastructure projects by crowding in the private sector, all right? So the projects that will be developed must again be approved by the National Assembly. If the guarantee is needed, if you want explicit guarantee through the sessional paper, that can be provided. I know this is the sessional paper. I don't know what the law says, but the sessional paper cannot be amended. Yes.
The sessional paper can be amended.
Yeah, so this can be amended.
The three alternatives we have is approve as it is, reject,
or approve with amendment. So you can make a recommendation, Chair. You can make a recommendation, Chair, on the issue if you want confidence that first, it must be commercially viable. That can be provided. The intention of the government is perfect, that it must be commercially viable. In fact, if the projects that are going to be executed are not commercially viable, you have completely changed what we had as an intention of this sessional paper. It must be commercially viable. That is when this infrastructure fund will make sense. But remember, Chair, we are doing this even for future generation. If you look at the two funds where we are taking them, the proceeds of divesture and privatization, the National Infrastructure Fund, we believe that by investing in infrastructure, we'll even give intergenerational equity to future generation by being used for their, when that time comes, they will still use it. But on Sovereign Wealth Fund, it's even more explicit, and that is with you. The bill is with you in the National Assembly. It provides for three critical areas where we spend the Sovereign Wealth Fund, where a portion of these proceeds will go to. One, it will be for infrastructure, which again are commercially viable. Number two, it will be for what we call external shocks or stabilization in the event there is a shock in the economy, like we had with COVID. Assuming, God forbid, another COVID strikes and the world does not come together like we did the other time, we will be exposed as a country. So you need some resources put aside to deal with that. But finally, it talks about intergenerational equity, which is provided in our Constitution, Article 201, under principles of public finance, that we must make sure that when we use the resources of finances, it is also for future generation. So that is the objective. And if there is any gap in making that clear, we at the National Treasury have no problem making that amendment that will now make it more clear that this fund is not supposed to be misused in any way or applied in any other way, apart from being put in commercially viable projects. We'll see where probably another mischievous person comes, either the president or the Minister for Finance, and decides to use this fund differently.
Yes, maybe Waziri, for information, the Sovereign Wealth Fund bill has not yet found its way to the National Assembly, so I think we may have to work closely with the Office of the AG to fast track. We don't have that bill yet. The more reason why, you keep referring to the infrastructure fund. Then all these funds, if you're talking about housing funds, it has a piece of legislation, either through a standalone legislation or through regulations. If you talk about all those funds have actually an anchor that safeguards the legality of how they're utilized. So anyway, the good thing, this is public participation, this is an engagement, and it is not final, it's going to be continuous. But I think the feeling we're getting from members, and that is your intention as well, we must make sure that these monies goes to the purposes of which you're talking about, commercially viable projects. And we cannot rely on your goodwill for that to happen. Yes. We must have a legal framework to make sure that that is ring-fenced for that particular purpose. Otherwise, PS, when IMF comes calling around for debts, you will just sign off and then goes to pay some debt.
But I agree with you. Actually, I think what is causing confusion here is the name. National Infrastructure Fund is actually a limited liability company. It's not a fund like NGCDF or a equalization fund or road maintenance levy fund. This, we decided to take extra precaution and have it as a limited liability, which now will be run commercially, because we are going to receive money back. When you invest in a road that is being tolled, there will be proceeds coming back to the fund, and those proceeds must be invested commercially, I mean in a viable manner. So it is going to be a very robust entity. I think actually we belabored, we toyed with the idea of calling it even a bank. Then we realized the bank has other regulatory framework where CBK will now be involved, and we didn't want such kind of bureaucracy to creep in because we want to invest. So we ended up with the National Infrastructure Fund as a name for the company. So maybe...
Chairman,
yes.
one minute.
Yeah.
1 minute. Chairman, on that matter, that alone, because now on this entire process, and they have already established what's called the National Infrastructure Fund as a company, then for us to, as we continue this process, then we need the articles and objectives of that already established company called National Infrastructure Fund to guide us on the process or on this particular matter that we are handling, so that if there is need for amendment of those things so that it captures the goodwill that we are saying, some of those projects has to be approved by Parliament, then that we shall be able to look together with the disposal of these shares. I think that will be nice for us to be given those particular articles and objectives of that company to help us going forward.
That's okay. We can provide the details of the company in terms of objects and articles of association. You want to do it? I think my PS wanted to add a point, then I ran through the remaining questions.
I just wanted to just support the CS that in this fund is going to be used to leverage financing from other stakeholders who would be interested in what has been termed as commercially viable. So you would need an entity, because you have to create for each project a special purpose vehicle to leverage. So I think these are discussions which, even benefiting from you also, we will be able to work together to make sure that we have at least that public trust and that the objectives for which this fund is being set up are achieved. So we can share with you the objects, but we are also amenable to any better idea from yourselves. Yeah.
And maybe just to add that, by the way, we have gone a step further, Chair. As a government, we have engaged all the state departments which we have identified for the commercially viable projects. The roads, energy, under the State Department for Irrigation, and also State Department for Transport. We have already engaged them, and a list of projects have been generated. And I think there is nothing wrong. We will get the list and submit to the National Assembly for oversight, because we want to be as transparent as possible. We are moving to the first world. We are becoming Singapore, and we must do that through open conversation and openness and transparency. One of the things that has taken Singapore to where it is transparency and openness. And I don't think we will start on the rock footing by not being transparent and open. Honorable Kasalu, I think, asked me about why are we selling, why don't we sell it domestically? I think this I responded to and stated the risks of selling domestically. Whether we were going to get the value that we are getting today, I doubt, because you know what the market price is. Secondly, we were not going to benefit from the forex inflows into the country. Thirdly, we want a situation where there is no disruption and continuity of business. Why Kenya Kwanza is speaking about Singapore and not, you know, Singapore is just a concept, it's a model. We are not saying we are going to borrow everything from Singapore. There are also could be bad habits there. Yeah, who says that? They are also human beings. So we are only going to pick the best out of Singapore, pick from China, and pick from the US, and pick from all these people, the best. And then we become the best of the best. Who knows? Kenya may be the best in the world in terms of its economy and running its affairs. So I think 3 years I had responded to that, and the same, Honorable Kasim, is it? Yeah. Umi. Yeah, Umi. Is it strategic that is ending in 2028? No. We are actually, when we divest, it will be this year. And 3 years
will be to 2027, 1 year 2028, 2 years 2029, 3 years. So the 3 years will actually end somewhere in 2029, depending on when this is finally concluded. So there is nothing really mischievous about 2028. Maybe you are thinking of election, which I know we are going to win again. So even that time, we will still be making this decision. So we don't want to take a decision now, which will compromise or jeopardize our running of the economy even better 3 years from now. Yeah, that's the confidence I have.
Chairman.
On the issue, what will be the future of dealers, agents? The more reason why we should offload or divest these shares into Vodacom is to avoid disruption of business, because this is someone who is in this space already owning 40%. There will be minimal interruption. The dealers will continue, the agents will continue. We are retaining, by the way, someone asked only 2 directors. All the independent directors are going to be Kenyan. So that apart from the 2 directors, all the independent directors are still going to be Kenyan. The CEO is going to be a Kenyan citizen. In fact, I was told there's a difference between a Kenyan and a Kenyan citizen. Yes, we are talking about Kenyan citizens. So if you are not a Kenyan citizen, you will not be the CEO, you will not be among those board members. I think I've answered to the intended purpose of the fund, and you asked about the only project, and I agree with you. I know what marginalization means, Honorable, and through the chair. And I say it, and I still believe, and I maintain that position. In fact, including my supplementary budget, some few changes that we may make, the few changes that we may make will only be covering those marginalized areas to give them a little bit more resources. We have a constrained fiscal space, but that's what we are going to do. On the Horn of Africa Road, I think this administration has pushed it faster than any other administration. It has been the talk, but now we are walking that talk. Honorable Kaluma, how long are we going to conclude this transaction? I think once Parliament gives its approval, and I pray the Parliament does, then the regulators may have no more than 90 days to conclude, and that is the end. Once that is done, we'll be expecting settlement or conclusion in terms of payment from Vodacom Group.
By that way, I hope we are getting dividends for this year.
Yeah, by the way, if March 31st will come, I'm sure, before we conclude this transaction. And we, obviously, the shareholding will still be at 35 to the GOK, 40 to Vodafone Kenya Limited, and again 25 to other shareholders. I think the Honorable Kaluma asked about Article 226. I think I've addressed that. On Safaricom having a role in our democracy, security operations and system, I think that I also answered, including data, personal data. Have we thought through about PPP model like Ethiopia has done? Yes, we have thought about PPP. And PPP, we are actually implementing some projects as we speak. One through PPP, and the chair of the PPP committee is sitting on my left. Another prominent member of the PPP committee is sitting on my right. The PPP, we have just launched a major project in this country, the Rironi Mau Summit Road. It's a PPP one. We are not spending even a shilling. It is being implemented by public-private partnership. There is also the one that we signed the other day on Up by Africa 50 or under the energy space. That is a PPP. So we are pursuing multiple approaches. But one thing that we observed as we started, Chair, was that public infrastructure projects are by nature having some element of risk. And so that is why we are creating this fund, to be de-risking and to lower even the cost. Because Kenyans, even as we ask you that we are going to toll the roads, we want those roads to still be affordable for Kenya's use. That you can only do if you have some public resources cushioning that. And that is why we are creating this fund. We have realized, remember, Rironi Mau Summit was actually awarded and had to be cancelled because it was not making any economic sense. If you are going to spend about 10,000 to pay on tolling, it was not making sense. So to avoid some of this, we are trying to de-risk
this public investment infrastructure project. So there will be multi-pronged approach. There will be PPP projects, there will be projects under this national infrastructure, and then the residual projects will go through our normal budgetary process, including a road in my village, Chair, which I hope will be done by the government of Kenya, and a road in your village and a road in everyone else's village here, which may not attract any private investment. On the breakdown of 25%, for now, what of the shareholding, the other shareholders, for now, I would only say that the total shareholding of Safaricom is 533,549 shareholders. We already know 2. The remaining are individuals who own the 25% in small amount. I don't know how many of us here bought Safaricom shares that time in 2008 or have subsequently bought in the open market. But then I may not give the details of all these 530-something thousand people. It's quite something, or companies. And then most of them, I think, are locals or Kenyans, but some are also international investors. Now, the other question was, is Vodacom registered as a foreign company in Kenya? I think what is registered here is Vodafone Kenya Limited, which is a subsidiary of Vodacom South Africa, which again is subsidiary of the Vodafone UK. So there's Vodafone UK giving rise to Vodacom South Africa, which has now given birth, if I may use that, to Vodafone Kenya Limited. So the Vodafone Kenya Limited is what is now investing on behalf of all those others. Parliamentary approval versus regulatory approval, I think I answered that. Whether there is not enough competition to maximize the price. By the way, it is not automatic that competition would give you the best price. Sometimes competition may lead you into taking a discount. Because if you put it there in the market and the prices adjust, and then because you have put more shares into the market, now the prices come to 25 shillings, you'll take that. So unless you decide to cancel the process altogether. Honorable Kwanya had asked about Sol versus Paul, that one I handled. Public trust. I know, yes, there is a problem with public trust. And that is what we are trying to build by trying to make sure that we do everything above board. But this public trust, I think, should now be applied across both ways. Much as some people may want just to have low trust in government, I think we should have even less trust in the opposition. Because when someone just wakes up and talks about 75 shillings as a price of Safaricom, like it is a good, and Safaricom is listed in the stock exchange, and this is someone who has gone to school sufficiently, I don't know how much, but somehow, reasonably so. So that person, in my view, should be less respected going forward, because you cannot talk about crazy figures without any substance. At least as we can talk and give reasons and explain where we have got our 34 shillings per share. But if you come, Honorable Chair, for example, and you tell us that Safaricom shares, the price is 80, honestly, if you are someone who really wants to lead this country, and I believe you want to lead this country in the future, or you become my running mate, you should be able to explain this thing.
Or you become my running mate, you know?
Or vice versa. But you know, the experience has shown that the elder one should be the candidate, and then the younger one becomes. But I think that would be a good government of 2 FCPS at the top. Envisaging proceeds to finance 2025-26. Again, I want to repeat, the proceeds of this transaction will not finance 2025-2026 budget. This money is going to be invested as a seed capital into the National Infrastructure Fund, which is a limited liability company. Is it a short-term liquidity leverage method? No. we are not actually even using it to shrink our fiscal deficit. It will ultimately shrink the fiscal deficit by taking out some of the projects that presently we are financing through the budget. Honorable Ruto has talked about near future dividends. Are we foregoing it or not by 31st March? I think that I've already responded to. Single sourcing of the buyer or the seller. This is actually a negotiated agreement between two shareholders. So then we come to the chair. If Vodacom decides to play those tax games, they could even do with the 40% chair. That's my belief. So I don't expect a company like Vodacom or Vodafone UK to start playing tax games on an economy like Kenya. But that can be dealt with through regulatory framework. We have come up even with amendments through the finance bills to deal with the possibility of. Yeah. And by the way, we have so many other companies operating here, which are even 100% owned, foreign owned, like Stanbic and many others. And we even talked about Airtel. It's 100% foreign owned, and they still pay taxes here. Safaricom is splitting Safaricom. I know there has been discussion around whether we should have split Safaricom into three and have Safaricom PLC into three and have M-Pesa separate from the communication or connectivity side, and then also the infrastructure. But that is a discussion that is still ongoing. I think also there is a feeling that we should continue having Safaricom as it is to maximize on all the advantages that M-Pesa would bring to the other classes or business classes. Whether there was an AGM resolution, I think that for the minority shareholders, I think this we responded to, that there was no, it is not compulsory that we had to have an AGM to disclose this, because it is shareholder to shareholder and it is not affecting the share price in any way. When will the payment be made? I think again I've responded to that. How to absorb the 250, I think again I responded that we are not going to finance our budget with this 240. So the question of absorption within the financial year does not arise. Again, dividend, I responded to. Why not set up the fund first? I think again that I have responded to. Mr. Chairman, allow me just to end by saying that is what I would submit, and I appreciate this engagement. Thank you.
Thank you.
Chairman,
Let me.
Chairman, just a joyrider. Chairman, allow me. CS, if everything goes well in your favor and your prayers as per the sessional paper, in your discussions with Vodacom, was it going to be a one-off settlement payment, or it's going to be staggered? That's my take.
When Mheshimiwa Makilap, that was, I think, the question I wanted to ask the CS. And if you allow me. Okay, go ahead.
I have two questions. One, from the Business Daily, it's saying that the lawyers and transaction officers, advisors, they are only 2.3 billion. So maybe you may be able to clarify that, and what is that percentage? Also, there's word going around that you have already signed the contract with a Vodafone. Maybe you can clarify that. And also, there was also some people saying that you are not part of the people who negotiated this deal. Maybe you can also clarify that.
The rumors.
Not rumors. I mean,
Who are you referring to me as CS or as National Treasury?
CS.
Oh, CS. Thank you. CS, I just want to expound on the question that was asked by Mheshimiwa Makilap. On your sessional paper, you said you'll be getting an advance payment of 40 billion, but you're not
telling us how the balance will be paid. Is there a payment schedule? What is the time frame within which that the balance will be paid, so that we have an understanding?
And which balance, Chair? Please just remind me again.
The share price, we talked of 204 billion, but in your sessional paper, you said you'll be getting 40 billion in advance on dividends. So the 200 balance, is there a payment schedule? And what is the time frame within which that other balance will be paid? That's one thing, because in your sessional paper, it doesn't state that. And the other question that I wanted to ask, I want you to put yourself in my shoes. Assume I go for public participation in Kisumu, and members ask, how did you pay one individual or institution 3 billion as transactional advisor? What answer would you give? And a follow-up to that, have you already paid the transactional advisor his fees? And if yes, from what accounts did you pay the transactional advisor? Thank you.
Thank you. So, Chair, let me start with the Honorable Mboni. You said that we are paying lawyers and advisors 2.5 billion. It could be slightly more, because I've just given the breakdown of what percentages. If you take those percentages, you'll see how much it is that we are paying. And it is within the provisions of the law. Honorable Rico actually mentioned that we should not go beyond 1.8 to the transaction advisor, and it is there stated at 1.36, and I think you got it right, Chair. That's about 3 billion that is paid to the transaction advisor. It will be paid net of the proceeds, so we haven't made that payment yet. It depends on the conclusion of the transaction. On signed contract with Vodacom, that we already have signed contract. You know, this country, sorry to say, but there are a lot of conspiracy theories. This country, people can create for you even a contract you don't know. They created for me finance bill last time. You remember, Chair, through Honorable Mboni, through the Chair. They create all sorts of things. But really, I don't think a company like Vodacom can get into a monkey place. And that is why we went ahead and as a government and made this announcement at the right time. And we followed the strict timelines as provided in law. And then after that, we took to the cabinet. The cabinet actually approved before the announcement. Then we made the announcement, and then we went and gave it to the National Assembly as per the law. And it is at the National Assembly. How then can we sign the contract? That is clearly mischievous. Whether I am one of the people who negotiated, the answer is, simple answer is no. Why would I get into operational things? I am a policy maker. I am at this level. I provide oversight. Then once these small people, so to say, have already concluded their work, yeah? You know, I have Kibet here, who is basically my Mutu wa Mkono. So once he is done with the negotiation there with the legal team, they bring it to me. The way they take it to Dorcas Oduor, who is the Attorney General, now to give the final authority, we put, the only thing that I guard against is I take responsibility. Because I am the one signing, they don't sign. So once I sign, I take that responsibility. So I take responsibility because they are working for me. But to expect me to sit there and start negotiating, give us 34, or is it 31? No, we can only do 28. So you are right, Honorable Mboni.
Chair, that issue is rested. The person who came with that theory.
Yeah, he's right.
He's right.
Yeah, and that is how it should be. Otherwise, you'll be asking whether President sat in the negotiation. He can't. Even the members of parliament, you should not sit in such negotiation. That is left for town.
Yeah, it's like a member of parliament.
We have mandarins here.
Let us allow the CS to finish, please.
Thank you. So I think, Chair, I wanted to leave it there. Is there any other thing that I've not said?
ask it, CS, payment schedule. Is it a one-off payment?
One-off.
One-off.
This is money that once we conclude, we expect a fat check from Vodacom of 240.2 billion.
So the 40 billion, the 40 billion advance in dividends will be lumped together with 204.
Yes.
And paid one fat check.
One fat check, which will come to our consolidated fund, and then I will seek the approval of this honorable house to appropriate it to the National Infrastructure Fund. Then once it hits that fund, a decision now will be made on this commercially viable project, how the money is spent, and this honorable house will receive the list of those projects being funded. And the country will now move to Singapore. That's, as we said. Thank you.
Thank you, Waziri, and I think thank you, honorable members. We've had a very, very robust discussion, and this will still go on because as we engage with Kenyans across the country, then you'll find more matters coming up. One of the things that's coming out of mind, Waziri, that we have to think through this, but of course the Parliament has powers to amend. Of course, I want to assure you there are not amendments that will be made on the session paper. Your ask is to consider and approve the proposal for partial divesture of GOK and shareholding from 35% to 20% in Safaricom PLC. And that is a decision, that is a resolution you'll be asking the House to make. You notice that that does not talk about Vodacom, and you already have a commitment with Vodacom. But again, those are now amendments that the House can make. However, Waziri, there are some details that we think that this committee will expect that for you to provide to enable us make a good decision, and also even as whichever decision that we make as we rally bind our colleagues, members of Parliament, to agree with us on the resolution that we'll make. There is need for approve that there was actually a cabinet decision for this particular sale, because that's provided for in law, that there must be a cabinet decision. We are not doubting that we have a cabinet decision, but it's important that you apply this committee with a cabinet memo that approved this particular divestiture. The copy of agreement between yourself and Vodacom that now again proves these particular matters that you're talking about in the session of paper, like the 3 years and all that. Yes, minutes of the boards of directors from Safaricom now again approving this particular transaction. You said you have a running contract with the transaction advisor. Please facilitate us with that framework contract for that particular transactions. This company that we are disagreeing whether it is an infrastructure fund or we need what are the objects of that company, what are the articles of association, what is a memorandum of understanding for this particular company, and then lastly, what are the proposed priority projects, those proposed critical commercially viable projects that you intend to start with. And again, the list can change, but I think it's important for us to have that, so that as we engage the public and they're asking us, what will you invest this money in, then we have confidence with documents from ourselves. And lastly, for all Kenyans that are watching us, we have invented again that courtesy of our young people working with us in a committee, a QR code. So for you to submit your views on this particular public participation, which you have started, we just need to scan the QR code. The QR code will take you to our portal, which will give you a chance to give us your name and whether you approve or reject this particular sale and what your reasons are or what your views are. So again, we invite views from the members of the public. We are going, even though we'll hold physical meetings across around 29 counties, we are also saying you do not have to come for those physical meetings, so just scan this QR code, you take us to a portal, and you'll be able to submit your views. So I think I'll give you CS to make your closing remarks, then we shall end the discussion.
Yeah, Chair, just to mention that your asks, we will make sure that we submit the documentation to respond to your asks, and also to state that, yes, we have already identified projects that we feel are commercially viable. That does not lock it out. There may be some changes, and I'm happy you have observed that going forward. But we can make that available. We had already asked the various state departments to generate the list, which will be submitted. Finally, Chair, I just want to thank the two chairs and the two committees, for giving us this opportunity and engaging in a very productive engagement. Sometimes we appear before committees and the engagement is not very productive. But I think this one is very productive. You asked questions that I think needed to have been asked. In fact, if I was in your space, if you take me back a few months to where I was, I would be asking similar questions. So I appreciate and I thank you. Thank you very much.
Thank you very much, Waziri and team. Please provide the documentations we requested within the course of the week, so that as we engage with the member of the public from next week, Monday, then again, we have that information. We thank you. We congratulate you on the good work that you've done. We congratulate you on the public engagements that you've been carrying out. You know, one of the reasons why we have lost some very good decisions was because there was not that explicit discussions with the public. You know, we are agreeing now we need to modernize our airport. But a few years ago, when government officials were being asked, is there any plan on the airport, then people were getting dodgy, and that got us into problems that we had. And I will urge that you extend this to your other colleagues in cabinet, that they need to go back to the people and explain these government decisions to the people. As we are doing that as a political class and in the Kenya Kwanza administration, then we are missing a gap of ministers and PSs who are not out there to explain government agenda to the people, so that we govern them together, and so that we don't lose that trust of the people. You want to say something?
Sorry, it's very uncommon and unusual for me to say something after you have concluded, but allow me, for full disclosure, I know this matter is already before Parliament, but I'd already programmed myself, together with the National Treasury team, to visit what I would call the former 8 provinces, to engage on the budgets, especially budget policy statement 2026-27, and also in the process I will be speaking to Kenyans on the National Infrastructure Fund, and also speaking with them on Sovereign Wealth Fund, and that may touch on this. So I wanted to disclose that so that when you see me engaging, I'm starting with Migori this week for the former Nyanza province, then the following day, Kakamega, then the third day will be in Eldoret for the North Rift, then we will do Nakuru for the South Rift and the Central Rift, and Kiambu for Central region, and then move to Garissa, and the following day Kilifi, and finally wind up with Meru. So I wanted to disclose it so that when you see me engaging out there, you'd be wondering why this thing is before Parliament, and I'm also engaging about it out there. I know these matters will still come in my engagement, which was planned to deal with budget for 2026-27.
Let me remind the chair this year that Eastern is 2 parts. There's Upper Eastern and Lower Eastern. So Meru is not part of the Lower Eastern. So come to Kitui or Bini. We tell you our problems. Yeah, don't go to Meru. Go to Meru for their own issues.
Yes, thank you. And Waziri, I may not advise, my view, my suggestion would be also take that time to explain, to do public participation on the legal framework for this particular program, so that you don't have again to do public participation again when you come up with regulations to operationalize this. Thank you, honorable members. A big round of applause for all of us. Sustaining our energies. Thank you for all the questions that you've raised. So members, we have 3 other entities to deal with this afternoon, not now, this afternoon. The Attorney General, the Capital Market Authority, and the Competition Authority on this particular matter. We also have NSC and PPRA. It being 2:45, we come back here 2:45, we come back 4:45. The good thing, the session this afternoon will be short, so that we hear from those other stakeholders. Thank you. We extend the invitation for lunch, Waziri and team. Thank you. Enjoy your lunch and good afternoon. The meeting is adjourned.